Good morning, everybody. Welcome back to another episode of The Market Open. We are live. It is a Wednesday, July 22nd. Today is going to be a big one. We got Tesla, Google, IBM, and ServiceNow after hours. We've also had a bunch of earnings already in the pre-market, which are having some implications right here that we'll have to talk about. So we've got a decent amount to go through. Someone says, bro, why are you yelling? Because it's the morning, at least in New Jersey. It's time to wake our asses up. We got shit to do, money to make. And that's why we're here, except for the people that are sleeping that just came back from work. This is your time to wind down, although we've still got to bring the excitement. On top of that, you've got Jensen finally talking about Kimi K3. A lot of us have been wondering for the past week, where has Jensen been? This is obviously a big deal. It tanked semiconductor stocks down 20% last week. So obviously there had to be something important that Jensen was likely going to say. And he officially has put out his comments. TLDR, he thinks it's a DeepSeek 2.0, but we'll talk a little bit more about what he had to say. And right before I went live, literally 5 minutes before I went live, AMD and Anthropic got a nice little deal. So we've got so much to get into. Bunch of things to preview. Obviously, we had a bunch of earnings this morning. AT&T, GE, Veranova, some weird stock reactions to these earnings that were actually pretty good. Reddit just cut off Google. That's why that stock's down 5%. SMCI, we'll talk about what happened yesterday. Doubling their margins in 90 days, which a lot of people don't believe. But nonetheless, that's really good for Dell and HPE. And then obviously, you got Tesla and Google coming up after hours, which I think are also going to have a lot of implications in terms of what's going to be happening in this market. So thank you all for being here. Good morning, good morning, good morning. Let's get into it. I think we'll start with AMD and Anthropic because this news just broke. I thought AMD stock would be up a lot on this news. It did pump to 551, which wasn't up that much based on where it was yesterday at 544. Now it's actually down 2%. And so it's interesting. It's kind of a deal that's been rumored for about a few months now. And I guess it was priced in, but still, even the announcement of the deal, you would think that the market would be excited about this. So this is what we got. AMD and Anthropic just signed a huge deal for tens of billions of dollars worth of AI servers. Anthropic will purchase up to 2 gigawatts of AMD's next generation MI450 chips starting in 2027. AMD and the circular financing bears will they'll have their day right here to once again critique this, but nonetheless, this is what's happening. AMD will also invest $5 billion into Anthropic. This is the first check that AMD is putting into Anthropic, which means I'm assuming they're getting a valuation of about $1 trillion because $965 billion is the current post-money valuation. So AMD is joining the game of investing in Anthropic at this valuation. AMD CEO Lisa Su, we have very much wanted to be a major part of their infrastructure. AMD is also reportedly in talks to provide a financial backstop for Anthropic's future data center leases. Another argument that the circular financing bears will tout as another example of circular financing. And AMD will use Anthropic's Claude models to help improve its own chip technology. Look, I think there's two perspectives on this. Number one, if you're an AMD shareholder, this isn't bad. I mean, even if you don't like that they're investing $5 billion at this valuation for Anthropic, they are getting business from Anthropic. What is the business they're getting? Anthropic's going to be buying their chips. And theoretically, they're going to be buying their chips. If a gigawatt of data center capacity right now is worth about $40 billion, Jensen said at one point it'll be worth $100 billion. AMD also has an event today, so maybe the stock is selling off a little bit going into the event. Typical sell the news, and we'll see how the market reacts to it after the event. But if 2 gigawatts by 2027 turns out to be 45 to 50 billion per gigawatt, that's 100 billion that Anthropic or something around that range, maybe it's not the entire 100 billion, is going to be coming into AMD in the form of buying chips and buying data center capacity. So the 5 billion that AMD is investing right here really is not that big of a deal if they're going to get multiples of that back. On top of that, obviously the financial backstop for Anthropic's future data center leases, AMD has a robust balance sheet. So there might be an argument from Anthropic to say, hey, this is cheap financing or a way to secure cheap financing. And if AMD is ready to give it to us, AMD has given up 20% of their company to OpenAI and Meta, then maybe this is something that we should take more seriously. I am surprised though at the stock price reaction. We've talked about this deal for like the past month. So I guess the market had priced it in, but even when AMD announced the OpenAI partnership and the Meta partnership, that stock was up 20%. Now, granted, that stock was at $170, not $530, so it is a different valuation on this name now. But I did think it would get a pop, and it's kind of consistent with the broader semi I don't know if I want to call it sell-off, but definitely decline we're seeing in the pre-market. Nvidia is down 1%. Nebius, which was pushing 220. That stock is down 3.4%. Micron, which was pushing 1,000 yesterday, that's back down to 930, down 4% after having a 12% day. A lot of these semiconductor names, SanDisk down another 4%, are kind of giving you the topsy-turviness of like one day being really good and then one day not being the best, at least so far in the pre-market. Maybe everything flips green. Cerebras is down 4%. Broadcom is down 2%. Like, it's almost like the market doesn't like the Anthropic and AMD deal, which is relatively weird. There is not any macro news that is substantial enough, I think, to take the broader markets down outside of oil prices, which continue to be elevated. Actually, I did not see oil this morning. I mean, last time I saw it was last night at 84.50. I think this might actually be your reason, folks. 86, another 3% gain on oil. I mean, that might just be the reason, to be honest, for why the semis are taking some of the hit right here, as they're more prone to the high beta nature. And then again, I thought AMD and Anthropic might be enough of a jolt to kind of get all of them to move higher, but it's obviously not happening in that same way. So wow, 86 on oil. I actually did not look at oil all day. Last time I saw last night, it was 84.50. I thought it was around that range. The fact that it's up another 3%, again, there are no major headlines outside of strikes that the United States launched last night again, but again, that was already announced last night, so nothing new this morning. But nonetheless, I think the market is starting to finally price in that might have an impact on oil. Obviously, the biggest concern that this matters to more than oil is our credit, and the 10-year is now pushing 4.64, which is also not good. I mean, you know, there were a few articles last night that I read as well that it's the same stuff that happened back in April of 2025. You can't have stocks go up, gold go up, Bitcoin go up, oil go up, and bond yields go up. Like, at some point, something has to break, and April of 2025, something obviously broke. It was the stock market, and eventually, you know, you needed that reset for everything to kind of go forward. We're kind of living in a market environment right now where everything is going up. Now, I know the semis have gone down, but the semis are just one sector of the broader S&P. If other things in the S&P start to actually get affected by bond yields and oil prices, then you start to see, you know, more market momentum to the downside anyway. So maybe that's just creating the strain that we're seeing in the pre-market. But as of right now, after a really, really good day yesterday, I mean, yesterday was one of the best days for semis we've had in 2.5 months. Like, everything was up minimum 7 to 8%, many names up 10 to 15%. So it's also natural to give some of that back, and that also might be what we are seeing happening right now. We do have Tesla and Google after the bell. Google's going to be very important in terms of their RPO, their backlog, and also their CapEx. So I think the other reason the semis could be selling off is just because they want to wait until Google says what they need to say, which is that they're either increasing CapEx or keeping their CapEx projections the same. And, you know, that announcement obviously will be very important for the market to try to bake in as well. The 10-year at 5% will kill the market. I agree. And the highest we get this 10-year, I do think it's really going to affect the market. I don't think we can have a 10-year yielding 5% with a stock market that averages 8 to 10% and have, you know, institutional investors say, yeah, this makes sense to take all this risk, especially when valuations have already gone up so much. Now, we peaked at 4.8 back in January of 2025. And we got down to like 4% a few months ago, but then the Iran crisis started. And so we're back up. At some point, Trump's going to have to do something to resolve this, either through, you know, or the Fed's going to have to come in and resolve this by hiking rates. Like, there's going to have to be something that ends up resolving the broader situation. Either we stop the war or we have to navigate what's going on with inflation. But until then, it's going to be a deeper question of how the market ultimately reacts to it. So OpenAI, Anthropic, well, not OpenAI and Anthropic. Actually, OpenAI, Anthropic, and AMD, they all are in somewhat of a similar deal. Today is the headline between AMD and Anthropic. Obviously, OpenAI already had their go with AMD getting 10% of the company. You know, it's funny because you would think Anthropic would be interested in something like getting a ton of equity in AMD, but that's not what they went for. They went for, instead of getting your equity, we want a financial backstop because we want to spend a lot on compute. And that's what AMD was able to give them, which is what we've got right now. IBM is also important today. And then obviously we have ServiceNow. Real quick, let's talk about ServiceNow, and then let's get into all the Jensen comments because that stuff is really important. So there is a software company in the pre-market that is tanking. I don't know how many people know about this. It's a small company, $5 billion, but nonetheless, it's in the software space. Doesn't do exactly what ServiceNow does, but is somewhat adjacent to some of the operational workflows that ServiceNow serves enterprise customers. They are down 15%. Why are they down 15%? Outside of missing on their EPS metrics by about 10% and then revenue estimates by about $7 million. They said the exact same thing that IBM said.
What did IBM say? IBM said because of Mythos, customers have started to reconsider their IT spend because they are very concerned about cybersecurity, which is why the cybersecurity stocks have gone crazy. And they are allocating more of their budget in the short term to CapEx that helps them resolve cybersecurity issues with the advance of Mythos. Pega basically said the same thing. And it's a little concerning because Pega's down 17% right here. What if ServiceNow says the same thing? Now, I don't think they will, and I would hope they don't. I would hope ServiceNow's customer spend and IT budget allocation that they have and enterprise clients are not going to pull away their spend simply because of Mythos increasing the necessity for CapEx when it comes to cybersecurity. If that does happen, I think that's a signal for the entire software sector to unfortunately have to deal with the same issue IBM is dealing with, which means it wouldn't be an IBM issue, it would be an entire SaaS issue. Now, if ServiceNow doesn't say anything like that, then I think, it's just an anomaly between IBM and Pegasystems. If they do, we're going to have an issue with SaaS for the next 90 days because obviously every software company is going to be affected if ServiceNow sets the tone for software spend being diverted from enterprise customers. So we're going to see what happens. If you obviously have a very, very large ServiceNow position, I bought 15 shares 2 weeks ago at 104. So it's not really a position that is in the interest of me of hedging or selling the 15 shares before earnings or anything. But if you have a very large position, it's one of those things to think about, just the volatility of what's happening in software. If they were to say something that is going to make the market a bit upset, then the question is, how is the market going to react? But I think Google's is going to be the most important. And then obviously we're going to have Tesla after the bell, and we'll see what those companies say about CapEx as well. ServiceNow also did acquire a company for cybersecurity. That's a very good point. So if anything, maybe there's a world in which that acquisition, which hurt margins 90 days ago, is a potential increase to their EPS because they've been able to secure some more enterprise clients based on some of their cybersecurity enterprise spend budgets. So there might be a world where that actually is positive for them, but we're going to have to see after the bell in terms of what happens. Trump just tweeted. Okay, let's go to this tweet. I was about to go to Jensen, but we've got a Trump tweet. This is also probably why stocks might end up going a bit lower right here. S&P is down. Okay, Trump, from this point forward, anytime the Islamic Republic of Iran shoots at a ship in the Strait of Hormuz, whether it be by missile, rocket, drone, or any other device or weapon, the United States will bomb and destroy one bridge or power plant, including those located next to or in the capital city of Tehran. Thank you for your attention to this matter. Okay. So that 10-day framework for a ceasefire headline we saw on Monday, I think it's safe to say that's not happening. The Pakistanis and the Qataris have failed in the past 48 hours of actually mediating. And it looks like we're going back to striking. So Trump right here basically making the point that we are now going to escalate. We have stayed away from the bridges and power plants because it affects citizens, right? And I don't necessarily think the United States wants to see that type of collateral damage happen. They definitely don't want the international scrutiny of seeing that happen. But at this point, Trump is now saying if they shoot at a single ship again, which a Greek vessel and a Saudi vessel caught on fire on Monday and Tuesday based on attacks by the Iranians. Obviously, Kuwait and Bahrain have been under constant attack from drones, and they've had to intercept a lot of those missiles. He is now saying if these ships are shot at, a bridge or power plant will be bombed and destroyed for every ship that is shot at here. Okay, that is what we got from Trump. Oil continuing to get a little bit of a spike right there at 86. Now we are at 87. All right, that tweet took us over. That tweet officially took us over. Did Kospi go down yesterday? I actually didn't look at Kospi. Kospi was up 1%. Okay, Kospi relatively flat compared to the memory names. I mean, at this point, it looks like $90 oil is going to happen, especially if this escalation continues. I mean, the market, we've known this escalation for the past 2 weeks, but the market hasn't been pricing it in. I think because the market, has felt this will be resolved. It's not going to get that bad. And maybe this tweet is just a warning and it's not actually going to escalate. But if it does, then the market is right to price up oil at that point because you have to account for that risk. So that's what we got by Trump, 87 oil. And that is also some of the updates we have on this AMD Anthropic partnership. AMD investing $5 billion into Anthropic, and Anthropic purchasing up to 2 gigawatts from AMD's MI450 chips. All right, Jensen, he finally gave some comments on Kimi K3. Here is what he had to say this morning.
Should the government ban or restrict Kimi or other Chinese models?
I hope not, and I really don't think so. United States, the world needs open and closed models. We should use closed models as much as we can, rent everything we can. However, the industry still needs open models. Science needs open models. Cybersecurity needs open model because it's safe. It's important for cybersecurity. It's important for national security. It's important for economic security.
Simple question on the front page of the Wall Street Journal. Should American companies be allowed to use Chinese AI models?
Absolutely. Absolutely. There's a misconception that somehow there are back doors that is somehow connected to China in some way. You download the models. You could fine tune it. You can enhance it. You can guardrail it as you desire.
So this Chinese competition is coming fast and furious. What should US AI companies do?
These Chinese models are excellent. Open source models that are excellent should be used. And so the market's misunderstood the impact of DeepSeek the first time. It's misunderstood.
Another Chinese model.
Yeah, it's misunderstood the impact of Kimi again this time. I think first of all, with great AI, open models, it's great for the whole industry. Obviously, when there's more, if there's great AI, even if it's open, wherever it comes from, there will be more use. Whenever there's more use, you'll have to sell a lot more NVIDIA computers, we'll have to build more data centers, we'll have more services, the technology will diffuse into more industries. And so starting point is great models lead to great use, which leads to great growth. And so that's just the starting point. That happened with DeepSeek, it's gonna happen with Kimi. There's also a misunderstanding that open models could be adversarial to the closed models. And that's also got it wrong.
All right. So Jensen basically said everything that we thought he would say. I think the market was waiting for him to just say it. And I'm sure he's going to reiterate it on earnings. I would imagine Google would say something of the same premise when it comes to them explaining their CapEx projections. But essentially, he said American companies should absolutely allowed to use Chinese AI models because you don't have to give your data to the CCP. You can download the models themselves and host them locally. He says the Chinese models are excellent. The market is, he's explicitly saying the market is misunderstanding the impact of Kimi again, the way they did with DeepSeek. And then he said great models lead to more usage. There's also misunderstanding that open models are going to close these hurt models or hurt the closed models. And that is also wrong. Elon agreed with this as he commented under the summary post by saying true. So you've got a lot of business leaders making the argument that the Chinese models are important. The open source revolution is going to be happening. But that open source revolution will require not only a ton of infrastructure and compute, which is why the sort of AI infrastructure trade still makes sense, but it will also require an understanding that you only pay for tokens if you are actually getting the ROI from those tokens, aka you might use the closed models for certain tasks, but you will absolutely be using the open source models for tasks that don't require the type of spend that is injected on the closed models. Now, at some point, if the open models can do everything as good as the closed models, which has always been the big argument around Anthropic and OpenAI for the past couple of weeks, that begs the question, not on compute stack, not on Nvidia and AMD selling chips, but rather on the value proposition of OpenAI and Anthropic. And I think the market is still trying to figure out what's going to be happening there. Oklo, that's up 1%. We did have some nuclear deals last night between the United States and Saudi Arabia. Oklo is not explicitly involved in those, but it's been good sentiment for the nuclear names. It was up 6% yesterday, up 1% in the pre-market, and then Micron right there is down about 4%. Speaking on data centers, we have a couple other big updates right here. SpaceX is exploring a data center expansion in Texas. And OpenAI, this just came out 5 minutes ago, is planning to spend more than $30 billion on a new data center in Georgia, 3.2 gigawatts, along with raising their own compute spending to $750 billion as per the Wall Street Journal. We'll talk about Reddit and what happened last night and why that stock is down 5%. OpenAI's projected spending on computing power through 2030 is now $750 billion, up from $600 billion projected earlier this year, with about 20 to 30 billion allocated for a new gigawatt or for 3.2 gigawatts in Savannah, Georgia. This is reportedly the first site where OpenAI is the lead designer and developer rather than renting chips from cloud providers like Oracle or AWS. I think the interesting part on this as well is like, all right, if this is the first data center that they're going to be designing the chips for in and of itself, is this the data center where the Cerebrus chips are going to be in place with OpenAI in terms of in terms of their collaboration? Is this going to be for regular Vera Rubins? Is this going to be for their collaboration with Broadcom? Is Oracle going to have a role in this? Like, I think a lot of these more logistical questions on how they're building these data centers is coming into question outside of just renting the compute from the hyperscalers, but also the spending commitments, right? $750 billion by 2030. That means to break even, OpenAI needs to generate $750 billion of revenue. I think by the end of this year, they're going to do about $50 billion of revenue. Or that might be ARR. That might not even be revenue, to be honest. So like, we're talking about, multiple magnitudes of growth year after year from previous levels of growth that is already multiple magnitudes above the previous year in order to break even to be able to pay for their commitments. And then the market, wants to assume that could be a multi-trillion-dollar IPO. Like, it's one of those things where the more you look at the numbers, the more you say, look, the company is not dead, but the company commanding the type of valuation they want in the public markets where stocks fall for, any little reason. I mean, it's a bit aggressive to ask that people would easily subsidize all that stuff. So we're going to have to see how the market ultimately thinks about what's going on with the data center spend and obviously how the rate of growth is being impacted by all that data center spend. Microsoft right there, that's up a little bit in the pre-market as well, as that's up about 0.37%. Okay, a couple other headlines real quick, and then we'll get to some of the other main stories. Rocket Lab. So Rocket Lab is up 2% because they got a $266 million contract from the U.S. Air Force. The stock was up a lot more last night, so it is selling off a little bit right here because of the high beta semiconductor sell-off we're seeing in the pre-market. But the launches will take place in Alaska, expected to be completed by the end of 2028, and it adds to the streak of winning more defense contracts. $266 million on what is a $40 billion market cap might not seem like a lot, but the point is it is adding to the streak of contracts that this company has continued to get. Neutron and Golden Dome, maybe they're priced in when you look at the valuation, but the catalysts themselves haven't actually manifested themselves yet, which, goes to show that the stock going from 150 to 60 might be the bottom. I mean, like, maybe it goes more below. If the S&P falls 5-10%, it's absolutely going below 60. But if the S&P stays relatively stable, it's had more than a 50% drawdown at this point. So any good news theoretically could be a catalyst, but if the semis continue to sell off and high beta sells off, then Rock Lab might continue to be stuck as well. But Rock Lab right there up 2.85%. We are going to see when the market opens if that one can get back up to that 74 level that it was at. If you are just joining, Anthropic signed a deal with AMD. AMD will be investing $5 billion into the company. Anthropic will be buying 2 gigawatts of capacity from AMD. And then Trump tweeted that from this point forward, anytime the Islamic Republic of Iran shoots at a ship in the Strait of Hormuz, the United States will bomb and destroy one bridge or power plant. We now have to see if Iran actually calls their bluff and if the United States executes on that, or if Iran says, okay, enough is enough, we don't need to go that far. And I guess we'll find out over the coming days as oil continues to spike up at $87 now per barrel. CoreWeave is up about 1% right here, 1.75, breaking above 80s. SMCI, let's talk about that because that was also really important. SMCI is up 14% right here, and it's up 14% for a reason. So what happened with SMCI yesterday? They guided for 8.4% margins 90 days ago, and they came out yesterday with preliminary guidance. The stock was up 25 or 22%. Now it's up 14%. And the reason why it's up is because they have a record amount of backlogs at $60 billion. And they're now guiding for a doubling of gross margins from 8.7% to 17%, which is very weird for a few reasons. Number one, why is a commodity server rack provider able to double their margins in 90 days? And I know they took a hit on some of their margins based on the XAI Colossus project, but even if you look at their 2024, 2025 TTM gross margins, the most they went up to was 13.8%. It averaged between 11 and 13%, and the TTM for fiscal year 2026 is only 8.83%. So it's still a substantial increase, even if it's not a full double. If you look at the TTM over the past 2 years, it's up still 30 to 40%. Like in 90 days to be able to get those margins to get up there, it's a little confusing. And this is why Dell and HPE were up yesterday, because Dell and HPE were growing much faster than SMCI, which is why their stocks have done a lot better. But their margins, which are better than SMCI's, also are not really the best gross margins in the industry. They're up because the market's like, wait a second, if SMCI can somehow gain the leverage over their customers, which is my my theory on why they're able to get these margins to go up. I mean, it's either some funky accounting or they have leverage because there's so much demand that they're able to say, hey, if you want these server racks, like, pay up. We're raising prices. We talked about that story yesterday about TSM getting ready to raise prices as well. And so maybe that's part of the reason for why SMCI has been able to make that move. That's why Nebius and CoreWeave pumped after hours, because A, Nebius also makes their own racks, but B, it's one of these things where if these companies have leverage over their customers because the compute constraints are getting so aggressive, then obviously they can raise prices, which would help their EPS. This is why the hyperscalers have been going down and the semiconductor companies have been going up. The companies that are paying for the compute go down. The companies that get all that revenue that turns into EPS go up. And that's why Dell and HP are up in the pre-market with SMCI up 12%. Now, granted, if we get a general semiconductor sell-off, maybe that's not going to be the case. And maybe, many of these names can take more of a beating, but that 12% pump on SMCI is a pretty big pump. And when the market opens, we'll see if that hits. They are getting into some new product mixes as well at SMCI, so maybe that's helping with their margins. But to be able to give that type of a guide means they see a lot of visibility in terms of demand for new products and for their current server racks, which is, why their margins continue to go higher. SMCI right there up about 12.7% in the pre-market. Nebius down about 2.9%. AMD, even after that Anthropic deal, down about 2.7%. Rocket Lab up 2.7%. Palantir is up a little bit in the pre-market. Let's talk Reddit, as Reddit is down 6%. Jonathan, thank you for the super chat. Admit, I subscribed to your channel 4 years ago on my honeymoon. That's awesome. That's crazy. So I've been with your community as long as I've been married. That is wild. I get all of my news from you, every live stream, and Basis Points Pod, loyal fan for life. Thank you so much. Jonathan, thank you for being here. Appreciate it. It means the world. That is super cool that you subscribe to the channel on your honeymoon and you've been here as long as you've been married. I was in Steve's chat last night and I said I'm on a date and everyone was like, why are you on YouTube during the date? And I was like, because I'm here to support Steve. So maybe the girl I was on a date on turns into my wife as well. And we'll be watching Steve for the rest of our life. I wasn't actually on a date, by the way. It's a joke. It's a joke. Anyway, Reddit. Why is Reddit here going down? But Jonathan, thank you for the super chat and appreciate you being here as well. Okay, so Reddit's down 6%. And the reason Reddit's down 6% is because they are canceling, or they're signaling they're canceling their contract with Google. And I don't really understand why the street is upset about this, because the contract with Google was a stupid contract to begin with. So Google signed a deal with them last year to pay $60 million for Reddit's data, because Reddit's data is some of the best data on the planet when it comes to, I know people have their own, opinions of Reddit, but a lot of times when people are searching for recommendations for different food or questions or relationship advice or all this shit, they go to Reddit, right? Reddit is still one of the main websites that gets traffic from Google. I personally did not feel that data was worth $60 million. I think that data is worth a hell of a lot more than $60 million, because attention is the asset in an AI world because of all the deep fakes and people that impersonate people. By the way, speaking of impersonations, I've been getting a couple emails from people saying they're getting this weird email from some fake Gmail account that has my profile picture telling them to invest with me. Please do not respond to those. They are fake. They're not real. I will never email you and say you have to invest with me or something like that. So please, if it doesn't look real, it's not real. And that's not a service I offer. But, in the age of AI, it's obviously easy to make things look real. And so the point is you need to have a focus on high value content. Not only Reddit, USA Today, Reuters, Politico, and other publishers are also reevaluating Google's crawler as AI summaries through AI overviews have reduced referral traffic, which is inevitable because all of us are now seeing the AI overview. We don't need to click on the website to be able to get the content because the content is summarized via AI. USA Today's organic Google traffic reportedly fell nearly 50% over the past year, while Politico's declined 23%. So although the deal is not canceled, but Reddit is thinking of canceling it, the stock is down 6% because the market's like, okay, Reddit's not getting the $60 million anymore. I think the market is getting this wrong in terms of the initial reaction. I think Reddit has more leverage here. Google is the one that needs to be paying up for the data. And Google's making a lot of money. They have the money to be able to pay for it. Reddit knows they have the money to pay for it. And so a measly $60 million is nothing to a company that's expected to do $119 billion in revenue in the past 90 days, which is what we're going to see today after hours. I think Reddit should be like, dude, give us $1 billion. give us 500 million. Like we need, like, this is a lot of content we're providing for your AI models to get better. Unless Google says we're just going to go get the content from somewhere else. And maybe that's where the market's like, okay, Reddit has no leverage and the advertising business is cool. But, the AI licensing stuff is really what's giving the stock a premium. So it's yet to be seen what's going to happen. Maybe the stock falls another 5% off concerns that the Reddit's not able to monetize their AI data. But if Google doesn't want it, I think Reddit could go to OpenAI. I think Reddit could go to so many different providers and be like, we have tons of data. Like, give us a little bit more than, if Reddit gets $61 million instead of 60, which I don't think is going to be that hard to get, the stock goes back up 6%, and I think they can get a lot more than that. So I think this is the wrong knee-jerk reaction, but nonetheless, that stock's down 6% right here. Reddit 174 as it is taking a hit. Why pay for the data when it's free? Well, that's what Reddit and Twitter have done to stop the models from stealing their data. Twitter has completely closed their API. All of the data on X now is going straight to Grok's models, not being stolen by OpenAI or Gemini. And so I would imagine Reddit has completely said, no, you guys can't steal our shit anymore. And they did this last year, which is why they got the 60 million in the first place. So they're going to have to pay up. And I don't think that's a horrible thing for them to do. But it's something that obviously needs to happen if they, if they want to get a bit more money. Speaking of Google, so we got earnings today after the bell. Put in the chat, pump or dump. What do you think is going to happen with Mr. Googs? I don't know, man. I'm a bit confused on Google. I think if they increase CapEx, the stock could go down. I think if they decrease CapEx, obviously that's going to be really bad for the semiconductor trade. Last night, Google rolled out Gemini 3.6 Flash and Flash Lite. So they are putting out some new versions of their models. It's not the Gemini 3 Ultra Pro that the street wanted to see a couple of days ago, which is why the stock ended up getting hit. But you are seeing them put out some new models, which is an important thing. You had Alexander Wang, the chief AI scientist at Meta, quote tweet another post with the comment Gemini who, when he showed that Meta Spark 1.1, Meta Mu Spark 1.1 is actually doing better than Gemini 3.6 Flash. And this is also why I think Google has been down for the past couple of weeks. The market wants to see Gemini 3.6 Ultra Pro and see it at the top of this list, or at least at the very, 1, 2, 3 rankings ahead of Kimi K3, GPT, and Claude Fable 5. But because it's near the bottom of the list and Meta Muse is now above it, Meta Muse just came out a few weeks ago, you've also got the market thinking, is Google falling behind when it comes to, putting out meaningful models? And I don't think that's the case. I think here's the biggest metric on Google today. I think RPO. Google has $486 billion of RPO that they had as of last quarter. If they end up getting 50% of that to convert to revenue, which is kind of what's to be projected, that's another $230 billion of revenue they're going to be having over the next 12 months. What if they say RPO today is now $600 billion? 550 billion. What if that RPO jumps like 80, 70 billion in the last 90 days? Because if that happens, they have to spend more on CapEx to be able to supply the demand for all that RPO. But it also means that the market is probably a lot more excited that, the cloud business is growing, even if their models aren't as good as some of the other models that are out there. And they're probably working on more of those models. Now, the other question around RPO, and this is why it's a nuanced question when we're going to be analyzing this today, is how much of that RPO is coming from OpenAI and Anthropic? Because last time Microsoft increased their RPO from like 380 billion to I think it was 620 billion, they indicated that 45% of that increase was because of none other than OpenAI, which is why I think the market didn't take the RPO increase that seriously. They're like, okay, it's just another little fake number that OpenAI is throwing out that they said they're magically going to find some way to pay. Which, again, I think OpenAI will pay a bunch of that money, but do you really trust that those remaining performance obligations will absolutely convert into revenue when half of it's from one company? This is also why I think Oracle's been down, and that company, theoretically is building a LLM that is being commoditized by open source companies. Where is their margin going to come from? Like, these questions are still out there, and these questions are very important, and obviously they're affecting themselves in the public markets right now. So I think it's a big earnings for Google. We're gonna have to see a lot of explanation on what's going on with CapEx. I don't even care about their search business anymore. Like, all I care about is, and I think that'll do well, but what I really care about is CapEx increasing or decreasing? Is RPO increasing or decreasing? Is the operating margin on cloud, which is the real story with Google, to be honest, besides their search business, increasing or decreasing? And then if you do have increased CapEx, increased RPO, how much of that demand is coming organically versus it being consolidated in a few customers? And then ultimately, does the market think that that's a reasonable enough explanation for why the stock, deserves to get back to all-time highs, which the all-time high I think was 408 on Google. It is now below the purchase price that Berkshire got a couple weeks ago at 350. So this one is going to be a very important earnings. What is RPO? RPO is remaining performance obligations. That is how much the company is saying they will collect if they perform and meet obligations for their enterprise clients. It's usually a gauge, especially in SaaS companies, and obviously in enterprise companies that have big, juicy contracts like the cloud computing providers, to understand they have a trajectory of revenue growth. And over time, if they meet certain benchmarks, they'll be able to collect that revenue. And the best companies convert their RPO. But, you know, over the past 2 years, the RPO has gotten kind of funky because there's like a few companies that are guaranteeing all the revenue, which is really important. Speaking of the open source models in the context of cloud computing with Google, Anthropic, as per the Wall Street Journal last night, is now doubling their midterm spend lobbying to $40 million, which means the next 3 months, you will definitely see some Anthropic influence in the midterms to push AI regulation. The AI developer is committing another $20 million to a group backing rules for AI ahead of November elections. The reason they are doing this is pretty obvious. They do not want the open source models to win because it will obviously lock them out from a lot of enterprises, a lot of consumers. If these costs for tokens continue to go down, people will easily switch from the legacy models. Quite frankly, I don't even know if the hyperscalers hate this because the hyperscalers need Anthropic and OpenAI to win. The hyperscalers also have their own closed models that they're providing. So there's a world in which I think a lot of big tech would be happy to not see open source succeed as aggressively. I don't think they necessarily want it banned, but they don't want the proliferation of open source to take away from the market share that the closed models are joining. And who knows, man, if someone gets into Trump's ears and is just like, we kind of need the economy to be propped up by CapEx and GDP growth, and you know these Chinese open source models are a quote unquote national security threat based on the lobbying that these Anthropic groups are paying for, then there is a world in which maybe Trump comes out with some regulations and kind of changes the dynamic of how we think of open source. I don't think they can ban it. I don't think that's really possible. They might make it harder for it to get more accepted. But, you know, obviously Anthropic's on the side of not having those proliferate. And Anthropic's argument, if you're wondering what their argument is safety, right? Their argument is these models are not safe, which again, begs the question on who actually determines what safety entails in the world of AI. GE Vernova, one of those picks and shovels plays in the age of AI. They missed badly on EPS. 310 is what the street wanted. They came in at 247. Their guidance they raised from 45 billion to 46 billion. Revenue was a slight beat, 11.1 to 10.8 billion. I was surprised at the miss on EPS. I don't necessarily have a reason for why. I did not dive into their earnings that deeply to see the reason. But stock's down 6%. So it's kind of what you would expect, though, to be honest, out of some of these picks and shovels plays. Like the semi sentiment is bad, and they've had an incredible run. I mean, GE Vernova stock even this year is still up, 58%. So any miss, and this is the risk to the AMDs, the Intels, the optics companies. So much good news is priced in. The stocks have done so well over the past year. GE Vernova's up 96% over the past year that any slight miss for whatever reason is the miss. The market's not going to care, right? They're going to say at this point, you cannot, you just can't go down when your stock is trading at the level. So that's why that stock taking a bit of a hit. AT&T, they beat by 10% on their EPS numbers, 65 cents versus 59 cents expected. EPS is up 20% year over year. Revenue is up 2% year over year, 31.5 billion versus 31.8 billion. AT&T and GE Vernova. Do we have anything else in the morning? Those were the main ones. We had Moody's, which didn't have anything too crazy. After the bell, we have Tesla, Google, ServiceNow, and IBM. But AT&T and GE Vernova were kind of the big ones that we had this morning. Where is gold? We haven't looked at gold all week. Gold is above 4,100. So getting a little bit of spike, up 1.5%. Silver's kind of been stuck around that 1.2% range, up or down every day, 59.52. Bitcoin has been moving. Brian Armstrong was on Capitol Hill yesterday, continuing to make the argument for why the Clarity Act should be passed, hopefully by August 7th, which if that does happen, that'll be a good thing. But, this 10-year creeping up, oil creeping up is not good for Bitcoin or gold, to be honest. Bitcoin is below 66.9 yesterday. We did not touch 67 right now. We are at 65. Again, oil spiking right here, pre-market, 87.10. This is the highest it's been in 3 weeks. The reason is continued strikes from Iran and Trump's tweet that they will bomb a power plant or bridge if Iran continues to strike ships going through the Strait of Hormuz. and it looks like that's why it's spiking. Dude, if we get $90 oil, I just feel psychologically, again, that's not going to be the best. Let's do the green or red poll in the chat. I mean, yesterday was a really green day. Like, not for hyperscalers, not for SaaS, but for the semis, I mean, it was just an incredibly green day here. And, you know, part of the reason was, I think, a little bit of a sympathy bounce. Many of these names are still down 30 to 40%, but also you did have a lot of good data center updates with Iran and HUD 8 mining and CleanSpark and this AMD Anthropic deal now, AMD Microsoft partnership. You know, the question is just, can we actually sustain it, or are we going to be choppy every single day with sometimes going up, sometimes going down? And we are going to have to see. What is your news source? It is cactusjack.com. If you are not signed up, you should sign up for this, especially because we are entering earnings season. So if you want earnings immediately, obviously if you join the stream, I will try to get it to you as soon as we can with the numbers. By the way, me, Tanner, Jose, and I think Neil will be live today covering Google and Tesla. But if you want them instantaneously, if you're on the go, you can sign up through WhatsApp. It's free to join, and you should be able to get all the details of those earnings. Okay, we got 3 minutes, folks. What are people thinking sentiment-wise? Are we back? Are we not back? Was yesterday a dead cat bounce? Was yesterday the sign of a lot more momentum coming back into the market? I mean, it's not really fun to see the pre-markets go red on all the names that ended up going green yesterday, but Pegasystems now down 18% based on what they said today, similar to what IBM said. But maybe we flip green, and maybe this is just a pre-market dip. I mean, if we were to give back the gains from yesterday, I think that would be a little aggressive, but obviously it could be possible. NVIDIA right there, that's down about 0.72% as well. Evan says choppy heading into Google's CapEx guidance. So Google's expected CapEx for 2026, if I'm not wrong, is $195 billion. 180 to 190 billion. Okay, so as long as that number is stable, I don't think anything changes. If that goes down to like 170 to 180, the market's going to be upset on the slightest decrease of CapEx. If that goes up to 200 billion, you would think the market would be excited. Now, if they increase the CapEx and the semi still dump, you know, that's not going to be fun. But given the $85 billion raise they're doing, I would imagine they're not going to decrease the CapEx. By the way, CrowdStrike and Cerebras just partnered right now. The cybersecurity names have been the biggest beneficiary out of everything that has happened, especially with the advance of Mythos, because that CapEx actually has to go to software that is rooted in cybersecurity. So Cerebras right there, still down about 2%, was up 17% yesterday, but they just launched a partnership with CrowdStrike to run their Falcon AI detection response system on Cerebras' high-speed AI inference infrastructure. So you're seeing a little bit of movement right there in the cybersecurity space. CrowdStrike up about 1%. All right, here we go. Thank you, everybody, for being here. It is a Wednesday, July 22nd. You have to try your hardest to refute the mute as the stock market is now open. All right, wake your asses up. Let's get into it. S&P 500 opens red, 746.53, barely red, but it is red there on the day, down about 0.24% as that goes down. Google opens red, Oracle opens red, Reddit really opens red, down 7% as Reddit is getting hit. Palantir opens red as well, a 2% move on Palantir as Microsoft is down. IBM hits a new low for the year. To be honest, I think this is because of Pegasystems. I know it's a small $5 billion company, but what they said is unfortunately, I think, affecting a lot of the software companies, and ServiceNow is going to have to say something really different as ServiceNow goes down 2%. I really think that's happening because of Pega today in order to kind of change some of the narrative right there. SMCI, that's up 14%. That is green. CoreWeave, that is green. Micron, not recovering fully from the pre-market, but definitely getting a little bit of a move higher. It was at 923, now at 947. It was down from 990 yesterday, but still going higher. Nebius right there, down about 1.2%. AMD down 1.3%. Again, AMD and Anthropic, the big deal people were waiting for, that was signed today. Just the stock did not immediately react in the
in the most positive way. Nonetheless, AMD only down about 1.4. Rocket Lab, again, that $262 million contract, $266 million contract with the U.S. Air Force. That stock's up about 2.74%. Nokia's down 2.4. SK Hynix is down 4. Nvidia is down 1. Palo Alto's down 0.5%. Apple's down a little bit. Capital One is down. Your financials are getting hit. Robinhood goes flat, but it was at 104 in the pre-market, now at 106. It did touch 108 yesterday. Cerebras actually up, I think, on the CrowdStrike deal. CrowdStrike up 1%. Cerebras up 2.34. Palantir really getting hit. Same thing with ServiceNow. Same thing with Adobe. So your software names are selling off, but your semis aren't necessarily pumping. At least they're not going fully inverse to the software names yet, although the semis are definitely doing way better than the software names so far. CoreWeave opens at 80. That's green on the day. Keel actually got an $8 price target today by one of the sell side firms. 460 right now. I know the stock was at like 650 a few weeks ago. 460 right now as the data center names have taken a hit, but it did get an $8 price target today. T1 Energy, that's down 1%. Figma, that's down 1.4. Iren is down 0.5%. ASTS is down 0.5%. Intel down 2%. Intel was at 89 on Monday. It is now at 103, so it's actually done relatively well this week from the low. Zeta right there down 2%. Again, all the software names taking a hit. Qualcomm, which I think Qualcomm signed a partnership with Samsung today, if I'm not wrong. So yeah, Qualcomm and Samsung expand collaboration with Snapdragon, powering the new Galaxy lineup across smartphones, watches, and intelligent eyewear. I really don't think the market cares about the wearables and the phones and stuff. I think the market really cares about Qualcomm's data center chips. So these partnerships are good, but I don't know if it's enough to get the market to be more excited. Lumentum, that's only down about 0.34%. Ondas said they secured about 70 million of new business today. Not in 1 year, but over a few years, and that 70 million is probably helping the stock get a move right here. This thing was at 650 a few days ago. They got another $7 million contract, I think, on Monday. So that stock up 4.9% as that's getting a little bit more of a move. Oracle actually flipping, which is nice. How about Nebius? Nebius flipping as well. Okay, so the data center names coming back into light right here. CoreWeave flipping up 1.92%. Dell is up again because of SMCI. I mean, again, if a company like SMCI can double their margins, it's not an easy thing to do in 90 days. You would imagine that Dell and HPE are going to have a little bit more operating leverage. And their margins are already way better than SMCI's, but if they can get another 3-4% out of their customers, I mean, and they still keep up the same growth, it's definitely a catalyst for the stock. Now, maybe you can say it's priced in, maybe the valuation already reflects that, maybe the names have moved too much this year. Those are all fine arguments, but if the market is moving on momentum, Dell saying, hey, we increase operating margins from 20% to 32%, like that's definitely going to be something the market cares about. SoFi right there going down about 1.9%. SpaceX continuing to be stuck around that 120 range. 122.50 as that continues to go down. Again, I think that ServiceNow is down because of Pega's earnings. I really do. I know it's a small company, but what they said is very similar to what IBM said. And I think the market might be afraid ServiceNow is going to say that. I mean, Palantir, I don't think is correlated necessarily to Pega. Pega does some of the same stuff that ServiceNow does, but Palantir is a software company. And I really doubt Carp's going to come out and say, yeah, customers are shifting their budget spend to hardware over software, which is why we missed our numbers, because I don't think they're going to miss their numbers. B, I think Palantir software is a lot more important in convincing customers to pay up. So, but nonetheless, it's a software name. And so it's in that same bucket. Salesforce is well down about 2%. As that one is taking a hit. Nokia is down as well. Mr. Reddit is down 8%. Dude, I think the market's got it wrong here. Like, I really do. You're not going to get 60 million from Google. Oh my goodness. That's 60 million's nothing, dude. Their data is way more valuable than 60 million. Like, real-time data from actual humans is a moat in the age of AI. And I think they could get 61 million from a competitor to Google. So if 60 million is why the stock is losing a few billion in market cap, it just feels a bit aggressive. 171 right there on Reddit. Nebius hitting Mr. 220 as well. Mr. Steven Fiorillo right here. This guy, dude. This guy. Thank you for the super chat. We're just tossing the money back, Steve.
I gave him a $50 super chat last night. He's giving me the $50 back. He's going to be playing around with his $50 every stream. Now I'm going to go to his stream later today and send him another $50. It's one of those things where like, you're either going to take this money or this money's going somewhere. But Stephen Fiorillo right here saying Google will eradicate the bear case. I hope so, man. I hope that Google shows CapEx once again is going to be gigantic and RPO is increasing as a result of more cloud computing customers, which means there's more AI spend, which means they have to have more CapEx to support that. The nuances here are, is that CapEx going to be distributed in the way that the market has been interpreting it would be distributed, aka the semi-AI infra names continue to get the majority of that CapEx, and then B, how much of the RPO is coming from a few customers? I think that is the larger question that the market is going to be wondering for. But again, they grew cloud revenue last quarter by 63%. I mean, AWS is at 30%. I know it's on a bigger base. Microsoft's at 40%. Like, to have 63% growth is just unbelievable. Imagine that number is like 75% today or something crazy. At some point, the market's like, all right, like it's happening. Like, it really is happening. But if that number is just above expectations, that's where we have to see how much is priced in or not. Bitcoin right there, 65,000, as that continues to be taking a bit of a hit. Google is the real winner. You know what? Because we got Google earnings, maybe that's why me and Steve are sending super chats. We need to make sure we pump up those numbers, baby. We need some good results on the Googs today. AMD, did we go green? AMD 546. We have flipped green. Let's see if that goes a bit higher for these Google numbers, or for these AMD numbers based on that Anthropic deal. CoreWeave right there also breaking out a little bit, up 2.94%. Dell is up 7% based on SMCI. Amit and Steve are doing circular finance. We absolutely are doing circular finance right here. Here's another argument for why I think we might be in a little bit of a better situation when it comes to these questions around, hey, are we going to see a bit of a crash? And no one can predict if we're going to see a crash, but you don't usually get a massive crash when everyone is prepared for it. And as of now, short interest across US equities is the highest it has been since 2010. For the Russell 3000, short interest is around 6.1%. For the S&P 500, short interest is now 3.7%. Across all NYSE listed stocks, short interest reached a record 9% of shares outstanding in late June. In 2008, the most we got to was 5%. In 2020, it was 6%. So we have more short interest in US listed stocks than we have had since 2008 and since 2020, the most going back to 2010, which begs the question, everyone is kind of hedging or preparing themselves, not everyone, but the market in general, for somewhat of a decline. And technically, in July, we did get somewhat of a decline, but that didn't happen on the market. That happened on SMH. It didn't happen on the S&P, right? So if the S&P 500 short float is the highest that it's been since 2010, then it makes you wonder that if people are this scared and they need to buy that protection, does that mean we are actually going to see a pretty big decline? And usually it's when puts are cheap and protection is cheap that you get the decline, because no one's prepared for it. Now, if people are getting ready for it, it might not happen as easily. Palantir right there getting hit 3.7%. This is the other reason why Reddit is going down. Reddit is seen as a software company. And so if the software names are down, Reddit will go down. I'm surprised Oracle's holding up, because Oracle's also in that IGV bucket. Oracle now flipping red, although it did hit 128. MU getting a nice bounce. It is very close to flipping green right here. So the software names once again going down, and the semi names trading off. Meta, why not? Let's go down 2%. Hyperscalers probably going down because the semis are going up. Amazon down 1%. Google's obviously down. Broadcom's down. OSS, after getting that contract yesterday, that's down 2%. Tesla has earnings today. That is also down 0.5%. Intel down 1%, and then ASTS down 2.6% as well. I mean, Meta also could be going down because, look, again, if Google says we're going to spend a ton on CapEx, so is Meta, which is good for the AI trade, but it's not good for Meta and Google in the eyes of the market. I mean, Meta doubled down on their compute ambitions last week and the stock fell, which, the market should want them to do that because they're getting a new diversified line of revenue outside of advertising. But still, it's the nature of how the market is interpreting a lot of this stuff. Reddit now 9.3% as that stock is taking a hit. Rocket Lab, are we holding 70? Nope. We are not holding 70 right here as that's going down. Reuters, Pakistan is seeking a $10 billion financial fund as a part of its mediation in Iran negotiations. Government sources say the package could strengthen Pakistan's economy and open up a new strategic partnership opportunity with the U.S. Pakistan seeks $10 billion fund from U.S. after mediating Iran talks. These guys want $10 billion for helping get a fake ceasefire in place? What? Hey, we mediated something that didn't actually mediate anything. Give us $10 billion. What is this, dude? Do they have some backdoor agreements with the Trump team that they would get this money if they... I mean, we know they worked closely. The Pakistani foreign minister literally tweeted a draft tweet that was sent to him via text by Jared. It was either Jared Kushner or JD Vance. And unfortunately, he forgot to delete the parts where they said, say this. And so it was very obvious that it was a tweet that was drafted up by the White House for Pakistan to put out. 10 billion's a little aggressive, dude. 10 billion? Now, granted, although we don't have a ceasefire, Pakistan did at least get those initial conversations started. Like, they're right about that. And it's, maybe the conversations didn't result in a ceasefire fully, but they definitely opened up some doors. Having said that, $10 billion feels a little up there. S&P 500 flipping red on the day as well. 747 as that stock is now taking a hit. 10 billion, huh? Dude, I would have done it for free. They need to send me there. I will do this shit for free. Microsoft, wow, 392. Why not? Why not? All the hyperscalers. IBM up a little bit. Oklo up about 4%. The U.S. signed a big deal with Saudi Arabia yesterday when it came to nuclear energy. This one was actually really interesting. So Trump has approved a landmark nuclear deal with Saudi Arabia, which was a big deal for the kingdom. This is a 30-year civilian contract to develop nuclear infrastructure. It could also allow uranium enrichment. The deal is designed to give the U.S. companies a central role in developing Saudi nuclear infrastructure. So Oklo, SMR, all those companies theoretically could be involved, which is why I think their stocks are up right now. And then the agreement is expected to face major congressional opposition, but lawmakers would need a 2/3 majority vote to override a potential presidential veto. So obviously our relationship with Saudi Arabia is strong enough to the point where the United States is willing to allow U.S. companies to develop nuclear infrastructure inside of the country. I imagine they feel that the Saudis will never develop a nuclear bomb. MBS has already said he does not have any intentions to develop a nuclear weapon. But granted, he's also said publicly, like, look, if Iran gets one, we're going to have to get one as well. So I think that's why he's been aligned with the United States to stop Iran from getting one. But in terms of nuclear energy as an entire industry, it's obviously growing, and it's going to have to grow because we can't depend on natural gas forever. Rocket Lab flipping back up to 70, up 2.6% as that goes green. Where is Netflix? 70. Okay, Netflix also getting a nice little boost, 66 to 70. So back in the 7 range after about a week since earnings. That's up about 1.9%. Reddit continuing to get hit, down 8%. Nvidia flips green. Micron is very close to flipping green. Micron, a nice 4% recovery from the pre-market lows. The SaaS names, unfortunately, are still red. Even CrowdStrike, after that deal with Cerebras, is down. BMNR is up 4%. Is ETH up 4%? ETH is actually up 0.5%. Interesting. Actually seeing some nice divergence finally between ETH and BMNR to the upside, not to the downside. How about MicroStrategy? Wow, MicroStrategy is down 1.2 with Bitcoin basically being down half, which means it's double the delta to the downside, whereas BMNR is triple the delta to the upside, or actually 3.75x the move to the upside. You actually don't see that happen often. MicroStrategy red because Bitcoin red, but then Ethereum slightly green and BMNR really green. My best guess is maybe BMNR is buying back more stock right now. That could be helping prop it up. RKLB right there, 71.23 as that continues to go green. Amcor, that is trying to go green, 66.50, but still flat right here. On the day, up a lot from the pre-market, and then Meta continuing to go down about 1.2%. Okay, let's see if Micron can actually break above 965 and fully flip green on the day. Well, 970 would need it to go green. It's got a nice candle from the pre-market, but if it gets rejected right here, Robin had just flipped green. Then we would have to see how this ends up happening. Ondas, let me get the exact headline on this because it's getting a pretty big move. It was, I believe, 70 million of new orders that these guys got, which for their market cap is actually really good. Ondas secures 70 million in new defense and autonomous technology orders. Awards include ISR systems and autonomous precision strike technologies, 6.9 million from an Australian CUAS order. Eric Brock says securing 70 million in new orders in the past 4 weeks is a strong demonstration of our execution on the substantial demand pipeline at Ondas and leveraging of our strengthening global operating platform. That stock now up 9% on the day. Where is BlackBerry? That stock's down about 0.5%. They did get, if I'm not wrong, it was either a new contract yesterday or some type of certification. Stock's down from the highs in the $13 range. Obviously still up a lot from that $2 range that it was at earlier in the year. Nvidia right there, 206, that flips red again. Iran is well over the 40s now. It looks like that 32 range last Friday was indeed the bottom, even if you bought it at 37 yesterday. You've done very well. So you're seeing Iran start to get a lot more momentum as that is up another 2.3% of the day. Yeah, BlackBerry secured a Secu Suite 6.0 renewed common criteria certification. And this is important for voice, messaging, file sharing on operational coordination. It's trusted by NATO, G7 governments, most G20 members, as BlackBerry's positioning themselves to be Secu Suite critical infrastructure. Stock right there is down about 0.5% today. MicroStrategy is still down about 1.8%. Novo, with that lawsuit with Lilly yesterday, is down 1.4 yesterday, or 1.4 right now. Why is Path down 6%? I don't know. They didn't have earnings, but it is a software company. Unfortunately, the software names are down for a bunch of reasons we talked about. This one, I never understood Path because robotic processing automation to me is one of the more easier things I feel that could be automated in the age of AI. Now, maybe I'm dead wrong on this and I don't know enough about RPA. But, why is Figma getting hit so hard? Because people think Claude can create a feature that helps you design stuff because theoretically it's not that hard. Now, I don't think that's necessarily true. I think there's a bit of more of a moat to Figma. But the point is the perception of the stock being down is because it's just a design company that could be replicated with some AI. Robotic processing automation, I feel, if you're hooked up to Anthropic and it already has all your business data, can engage in some of that RPA that doesn't require you to have another service vendor like Pat. So now maybe I'm wrong on that, but that perception of that understanding of their moat in the software space, which, your moat is the biggest question when it comes to software in the age of AI, I think is what's getting discounted right there. CoreWeave up 4% as that continues to go green. Yeah, Donovan says it exactly. Path is likely getting hit because of Claude's new feature to record your screen and teach it manual skills, which is what Path does. Exactly the point. And, Claude, Cowork, all these features, they are going to really make you question these software tools. And I don't think software as a whole is dead, but there are some software companies that are, not that important in the grand scheme of things that the market's going to start questioning. Why are we paying a premium or a multiple on earnings when we can buy CoreWeave, which has 99 billion of, backlog revenue and is down 40%? Like those questions from a capital allocation perspective, they also think are really important. Ondas does have a big short float. That is correct. HIMS and Ondas, I think, are two of the highest shorted stocks. HIMS shorts have not really left the stock for a while, but Ondas is 37.79% short. So you could be getting a little bit of squeeze right there. Wow, Nebius, all right, getting a breakout. Micron should hopefully be next, 223. That's up 3. BMNR is up 3.69%, and then Netflix right there up 2.3%. What is Nebius's short float? I think it's like near 15%, which is still pretty high. It's probably increased over it's 30% as of June 30th. So I don't even have the updated numbers for the last 2 weeks. I would imagine that 30%, unless the short's covered at the bottom, which is not usually what shorts do. They get very greedy and they double down. It's probably higher than 30% at this point, which could set up for a really nice squeeze. Google right there, 347. As that's right on the day. Do you own CCXI? No. This thing started getting a ton of retail hype when it was $19. Now it's at $14.80. I don't get it, dude. I don't get why people are buying this. It's a humanoid robotics SPAC, and none of the big humanoid robotics companies are public outside of Tesla, and Tesla still has a lot of progress that they have to prove to the market. And people are ready to bet on a unproven robotics company that supposedly has 300 million in backlog, but if you read the fine print, they say over many years. None of that's guaranteed to happen. And they want to go public through a SPAC, like because they can't raise a private round. Why can't they raise a private round? Well, maybe because their shit isn't good enough to raise funding. So they're going to retail. Like, it just reeks of like, I don't like it. Granted, I think the stock can pump because it is the only way to get access to robotics outside of Tesla and Amazon from a pure play perspective. But then you have to ask yourself, what are you actually buying here? So I don't fully love it. They have partnerships with Amazon. Yeah, but what does that mean, right? Partnerships with Amazon, like what does that actually mean? How much revenue is actually coming to this company? And why are you paying the multiple that you're paying on it? And what is the growth rate, right? Partnership with Amazon is a fun headline, but what is the actual growth rate on these guys? Because Figure and Apptronic, I'll tell you, they're not shipping robots like crazy. So what makes you think Agility is going to do that? If Tesla's not shipping robots like, what makes you think Agility could do? You know, it's like, but retail really thinks humanoid robotics is going to be the next big thing, which I think as well. I just think it's a few years away. So they're front running it by buying up the SPAC. And to me, it just reeks of what happened in 2021 with a lot of these big ideas that ended up going public through SPAC. SoFi right there, still down about 2.5%. As that's getting hit. What about Bot? I don't like Bot either. Their NAV is $8. Why are you paying $30 for this? Why are you paying a 3.5x premium for all their private companies? Like, why are their private companies worth that much? Why are they worth a 350% premium? Their business model is diluting shares and buying stock in private companies and keeping their MNAV elevated enough to keep diluting. Like, it's the same thing as these crypto treasury companies. And I think the past year and a half has taught a lot of us about crypto treasury companies and how not sophisticated they are. And so I don't know. I don't know if humanoid robotics is the asset that you want to do that strategy on. Oracle flipping red. Rocket Lab up about 2.86% as well. Meta continuing to get hit, dude. Goodness gracious. 632. As this one keeps going down here on the day. Amazon partners with everybody. That's also true. Amazon partners with everybody. GEV is down 6% because they missed on EPS. Does anyone have an actual reason why the market's upset at GEV? Like, is it literally just the miss on EPS, or did they say something that is concerning future growth? Free cash flow was 12 billion, or they're guiding for 12 billion. Revenue, they're guiding for 46.5. The street wanted 45, so they're up about $1 billion. Wind revenue was down 11% year over year. That might be the reason. Power revenue was up 14%. Electrification revenue was up 29%. Wind revenue was negative 11%. They bought back 4.3 million shares at $8.54, about $4 billion of stock, gave a 50-cent dividend. CEO said we have a backlog of $170 billion, continued revenue growth and margin expansion. We are building momentum and raising our 2026 financial guidance. So I think the miss on wind revenue is your reason the stock is down 6, which feels like a bit of an aggressive reason, but that seems to be the reason. Iran 43 as that continues to go higher. Okay, so Iran participating today, Amcor participating today, Nebius and CoreWeave really participating today. Nebius 225, a lot of them came from the lows of the pre-market back up. Micron about to flip green. This was at almost 920 pre-market, now almost 970. SMH just went positive. If the semis are going to have a second really good day in a row, something has to go down, and that something is Palantir and Salesforce and CrowdStrike and ServiceNow. IGV is probably down 2%. IGV is down 2.07%. I bet you Shopify is down about 1%. Shopify is down 1.8%. Reddit's still probably down about 9%. Reddit down 10%. It's got to be kind of comical, right? I can just imagine there have to be some hedge funds that are like milking the long semi short software trade or long software short semi trade on an intraday basis. Like there's got to be these algos at hedge funds that recognize within the first couple minutes of the market open, it's going to be one of those days where you go long Micron, short Salesforce. And it's just got to be printing money for them daily. And you know, they can do the opposite. And we've had a few days where the software has done well and semis have gone down. But the majority of the year, it's been, you know, semis up, software down. Amit, are you starting to get sick of every day having to talk about the semi versus software flip-flop? Yes, but I also think it's kind of inevitable. Until Anthropic and OpenAI go public and we get that out of the system and get the big boogeyman that's private, that's going to kill all these software companies into the public markets, I think this flip-flop will happen every day. Or unless the software companies produce unbelievably strong earnings that cannot be denied, we're going to have this flip-flop. Unfortunately, IBM, software recovery was actually going well until IBM opened their big fat mouth and ruined it. And then Pega today also ruined it by saying the same shit IBM said. So we definitely need ServiceNow to not compound on the statements of some of these other software companies. But if they do, or if there's any indication of it, no matter how good some of these companies put up there, I mean, Palantir got taken down last quarter, not because of their earnings, but because all the other software earnings sucked. And Palantir's just in the same bucket. Same thing with Microsoft. Same thing with Shopify. Shopify accelerated GMV for the first time in 4 years. They're growing 33%. Stock went from 150 to 94. Like it just, and what went up during that time? All the AI infra plays. So it's one of those things where it's like, I don't know how good of a quarter these guys are going to have in order for the market to just ignore the software is dead narrative because of AI infra. Yeah, Zeta as well. Every time this thing got ready to break out, you know, it's been taking a hit, even though they're growing revenue at 50%. Zeta right there down about 3%. Micron not able to break above 970. It would be nice if we could, but it's not doing that right now. Am I crazy for full porting Adobe? I think Adobe is cheap. I think there's deep value in it. The problem is the deep value comes from some elements of financial engineering versus top line growth, which has slowed down. And I think if that growth continues to not slow down, but just be stagnant, the market's not going to be excited about this stock. So I don't think it's crazy to buy Adobe here. I think you just have to be okay with sitting on potentially dead money. And then when it flips, I think it will flip aggressively. But if that aggressive flip is like 10, 15%, 20%, the question is, do you want to be full port on something just for a 20% move? That might not happen, you know, for a year, if not longer, based on how long this rotation continues to last. AMD finally flipping green today, 552 based on that Anthropic partnership. That's up 1.5%. I wish that had happened earlier in the pre-market. It would have been more justification that the market's excited about it, but the fact that it's happening hopefully can hold on. It would prove the market actually cares. Oracle back to green as well, and then Google back to green. Same thing with Salesforce and Adobe, right? Like the difference between ServiceNow and Palantir is these guys are actually growing. Palantir is 85%, ServiceNow is at 20%. Salesforce and Adobe are like 8 to 10%, and so that core growth is not there. The buybacks are the only thing that's helping EPS. And if this market wants growth, you know, these companies are just not fully growing right now. Iran, that continues to be up about 5.2. So Iran, Nebius, and CoreWeave are giving you more love right here. Some consulting companies are down like 80%. It's even worse. That is also true. The Accentures of the world are really being questioned in terms of their moat in an AI world. All right, we got some Trump clips. Let me pull these up. He is speaking at, the audio might not be the best because there's a plane in the background, but he's commenting on oil and the war. Let's pull this up right now, and then we'll keep going from there. First, this is Trump on Americans being against the war.
A poll just came out. Americans don't want high gasoline prices, but they're not against the war. That just came out loud and clear in a poll. Nobody wants Iran to have a nuclear weapon. Do you want Iran to have a nuclear weapon? You think it's good? Go ahead.
Okay, so that's Trump on Americans support the war, even if they don't like gas prices. And then this is Trump speaking more about Iran and a nuclear weapon.
To honor our heroes, and they are indeed great heroes, actually. They said, and all of them said very strongly, we cannot let Iran have a nuclear weapon. They won't have a nuclear weapon. So we're going to honor them. I guess some of you are going with us.
Okay, that's those are the clips. So nothing too big from Trump right there outside of, well, they're actually the big takeaway from that is it gives you a little bit of a lens into his mind for the midterms. I've had a little bit of a theory over the past couple of weeks, just given the escalation, that I think Trump doesn't really care that much about the midterms. He's going to stake his legacy on this Iran conflict. Because theoretically, even if the Republicans win the midterms, there's not that much legislation he can get passed in the next 2 years. The big, beautiful bill was kind of the big thing that he was able to get done for the second term. And so if he's making the argument that Americans support the war and they don't care that gas prices are going up because they'd rather not see a nuclear Iran, whether or not those poll results are real, whether or not he's consuming data that might not be telling the full story, the point is the polls that he's looking at are convincing him that he's doing the right thing, which is not a Trump thing. I mean, this happens on every administration, right? They use potentially biased data to justify their point. The question is if it's accurate or not. Like, do Americans actually support this war? Like, if you really polled, 20 million Americans, would they say, yes, this is a good thing to do or not? And I think that is the bigger question right here. But that is also why oil prices have continued to spike up. Oil is 86.52, still up about 3% right here as we are green. Dell is, wow. Who's in Dell? 9.5%. My goodness. 9.5% as that continues to go green. I mean, this is pretty unbelievable. All off SMCI numbers. All off freaking SMCI numbers. SMCI, double the margins. Okay, Dell, HPE, go higher. Do a poll here. Okay, we can do a poll here, although we are not all in America here, so this is a bit more international. I'm going to guess, very simply put, do you support the Iran war? I'm going to guess it's 60-40 no. I will say 40% of you say yes, 60% of you say no. Again, we're not all American here, but I would imagine that's what it looks like. Let's get a read on the consumer and what's going on there. Again, AT&T had some updates in terms of what they were doing or what they said for where their consumer is going. Obviously, retail sales were really good for the month of June. But here's a few updates on where the consumer is headed right now.
Yeah, I thought this was really telling. We talked about how strong delinquency performance has pretty much been every quarter this year. Other metrics that we look at, payment rates. We talked about that earlier. The CEO says they are meaningfully above pre-pandemic levels across all of our customer segments. We continue to see healthy spend growth driven by both account growth and by steady growth in spend per consumer. When we look at revolve rates have stabilized over the past year at close to pre-pandemic levels for our major products and segments. Now, none of these observations are conclusive on their own, but I think collectively they paint a picture of strength of the consumer. So I know that's
from Capital One, which had a good earnings yesterday. So Capital One, JPMorgan, Goldman Sachs, all of them are pointing to the consumer being in a pretty decent position right now.
There's a lot of hand-wringing around the inflation and how inflation is eating up big chunks of wages. And no question, that affects people. But overall, I mean, when you hear metrics like that on the credit side from a Capital One, which isn't just catering to the high-end consumer, that's a really positive statement about the economy.
I think it is. Now, in terms of the market and how it filters it in, these are comments about a quarter that ended with crude under $70 and the 10-year Treasury yield under 4.4. So in the months since,
but not,
no, not for the most,
oil,
not for all of it. But basically, I think that the market's sort of trying to figure out if they're going to have to pay attention to those things again. Not that the consumer's really problem number 1, 2, or 3 for the market, though.
Right, but if inflation becomes a problem. Look, Pulte Group, we've talked about some of the pain in the housing market. Thought this color was notable. It just shares what they're seeing across the country. All of our 5 regions, according to the Pulte Group CEO that we report on, saw positive year-over-year growth in all 4 of them. In 4 of them, the West being the one that I think is probably still the softest, specific to the 4 where we saw some stabilization and I think positive signs. I would call out the Midwest. That's a strong market for housing. We continue to see strength there. We also see some favorable trends out of the Southeast markets. We particularly like what's going on in the coastal Carolinas markets in Greenville. And then I've got to highlight Florida again. Florida was up 19% year over year for Pulte.
It's interesting because when you see those numbers from AT&T, Capital One, Pulte Group, like the consumer anecdotally is not in the right spot, but the numbers, even the labor market numbers, the jobless claim numbers every Thursday, they're not bad. They're definitely not at a level where you would think the labor market is really struggling. And thank goodness for that, because if it was, the Fed would be in a worse situation. But like, if earnings are any estimate of what's going on, even with rising inflation, rising oil costs, on an aggregate basis, consumers are continuing to spend. In fact, everyone's going to be like credit cards. Well, we looked at that stat 3 weeks ago. Credit in an aggregate amount of consumer spending declined by $30 billion at the end of June. And $30 billion is not a lot in the grand scheme of the trillions of dollars that are spent. But for the first month in like 2 years, it declined. Which, maybe people are looking at their credit card bills and realizing they can't afford some of this stuff and they're pulling back on the spend, which is good from a fiscal perspective, but it's not really reflecting on the numbers of the aggregate consumer going down, which might be a good thing. All right, what are the results on the poll? Damn, 61-39. Did you guys just take my 60-40 and make it happen so I could sound smart, so I could look cool? Because if you did, I appreciate it. That's interesting. 61 say no, 39% say yes. Yeah, I kind of had a feeling, because 50-50 is a little bit too much. 60, I would say about 10% more people don't want the war to happen. And then I would say, there's a good 40% that believe in the idea of not letting Iran be as hostile as they are. The question is, what does it mean for the American public? That is the deeper question here. And, is it 60-40, 51-49, 70-30? Because that will absolutely determine the nature of these midterms. Rocket Lab right there, 71-74. Let's see if we can get this one back up to 72. Google's at 349. Google did get an outperform today by Citizens, JPM. They said, we think it's going to $515. And we believe that their model efficiency, even with the AI delay, strong cash flow, and core benefits of cloud computing are why Google deserves to be at $515, which is significantly higher than what it is right now at $349. So these earnings today are going to be very, very, very important for Mr. Googs. Klarna had that deal with Apple yesterday that I still don't fully understand, but they did have a new buy now, pay later deal. Klarna is actually down 4% today after being up 7% yesterday. But it looks like Apple will be bringing more products to people that can get on payment plans to buy them. Interesting, BMR is making a move here. ETH's not going crazy. It's actually very interesting. It kind of feels like they might be buying back a ton of stock, which is helping. I mean, when's the last time we saw ETH up less than 1%, BMR up 5%? There's either a whale that's accumulating, an institution that's front-running a piece of news, or they're buying back a ton of stock right now. But even if they buy back stock, you kind of need a bigger macro reason for this thing to pump at the elevated level that it's pumping at right here. 10.7 million shares have been traded so far on it. S&P 500, 748 as Palantir continues to get hit, down 3.5%. 10-year still creeping up as that continues to go higher. Houthis deploy missiles and drones to attack ships in the southern Red Sea as per the naval group. This is continuing the maritime blockade that the Houthis have put in the Red Sea for the Saudis. CBS is reporting that the U.S.-Saudi Arabia deal is expected to be signed around 1:30 p.m. I wonder if Trump will be live with some representatives from the Saudis here. But it looks like that will be happening later today as well. Fox News, lawmakers are targeting energy affordability through a sweeping permitting overhaul in the new House bill. The Permitting Our Way to an Energy Resurgence, or POWER Act. They always come up with these interesting names. Speeds up permitting for pipelines, transmission lines, and power plants while overhauling key sections of the Clean Air Act. The package gives dispatchable power plants priority over intermittent wind and solar, includes the Fire Act for wildfire burn exemptions, and faces an uncertain floor vote. Maybe that's why T1 was pumping today, as that's up 1.2%. Is Enphase up? Enphase up. So this is a friendly bill towards wind and solar. Two things that Trump has not talked highly about. Hopefully that's not a detriment to be able to get this passed, because obviously we need a lot more energy, particularly from the permitting side, because that's part of the reason why electricity costs have continued to go up. But that is a bill that is being introduced today. The POWER Act, Permitting Our Way to Energy Resurgence, on the House, which will be introduced today. Zeta is still down 3. Adobe down about 1.15%. Does Cerebras sell infra or just chips? From my understanding, Cerebras sells chips. There might be some elements of other infrastructure they sell, but those chips are a big part of the infrastructure in general. But they sell chips particularly for inference, which is why they've been able to get the premium that they have, up 7% on the day, $50 billion market cap, partnership with CrowdStrike this morning. Credo was green yesterday, continues to be green today, 227, as that's up 1.7%. Okay, so software once again going down. Semi's not really going up. I mean, they're up. The neo clouds are definitely up. Micron is kind of weird, not breaking above 970 when Nebius doing its thing, but maybe that changes. Again, the really big piece of news today was Anthropic and AMD partnering. I feel like it should have been a bigger deal, dude. It didn't feel like a big deal. And the $5 billion investment is fine, but I thought they would be like 10, 15 billion. I thought it would be a very, very big splash. And I don't know. It feels like it's not even that relevant right here. I also think people are probably just fatigued of Anthropic, and AMD is getting them at a $960 billion valuation. So it's not like, AMD's only upside is if they go public at this point. And I think people are questioning if they can command a $2 trillion value. Like, do we really think Anthropic can be up $2 trillion when it goes public sustainably? Penguin was down last week based on getting a downgrade by Barclays. Getting a little bit of a move today, as that is a memory name. $2 trillion for Anthropic. We didn't let SpaceX get $2 trillion. We let it get to $3 trillion for like a day. SpaceX now at 1.6. Now Anthropic's numbers are going to look way better than SpaceX, but I don't know, man. I still wonder if people would just be eager. And honestly, if we're being honest, there probably is way more demand. I mean, SpaceX was what, 20 times oversubscribed? I mean, Anthropic's probably going to get a ton of demand. I just wonder if the market can handle all of it. And, at what point is the market going to be expecting some level of net income from these guys? SoFi still getting hit right here. Wow, SoFi, 1707, down 3% right now. I think 500 billion max, dude. If it goes public at 500 billion, a lot of investors are going to be down 50%. Dell up 9%. I don't know, man. Anthropic can't fail. That's the issue. But I also wish we could just get the IPO over with. Like, I know I joke about them staying private, but if you just get everything out there, the market can digest. The market's really good at digesting stuff and moving on. And right now, I think that's what we're waiting for as well. Here's JPMorgan's AI analyst about how we are starting to see the AI investments begin to show an ROI.
Yeah, the conversation that we were having back in December was this is all about the Mag 7 and the hyperscalers. And then look what's happened this year. The Mag 7 is down and the market continues to move higher. Well, it's all about the tech sector. And then we saw disruption in the software space. And now we're seeing a big pullback in semiconductors. And yet, through all of that, the market is near all-time highs because we are seeing a broadening. Earnings are continuing to deliver. A lot of that is tech, but you look at industrials, utilities, financials. This is a broader story, and that I think is really healthy.
Have we seen enough of the results this quarter to know there's not going to be major disappointment across the board?
Well, the early results look fantastic. Almost 90% of companies are beating expectations. And so I do think the results are going to come in strong. What we have to recognize, though, is because of what we've seen in markets, because of higher expectations, companies that do miss or don't beat by enough are likely to see a lot of downside. You have to be prepared to manage around that. And frankly, look for some opportunities because volatility can be your friend when you get a little bit of this volatility.
I don't know if anyone has ever thought about a break in the markets and actually identified before that break the cause of it. In hindsight, it always looks obvious what's going to cause it. What would be the causes this time, you think? Would it be inflation is too stubborn? Would it be that, and that causes the Fed to raise rates? Would it be that the AI capital spending somehow that the money's not there or that it's pared back? What would do it this time?
I think there's the two top risks on our mind right now. Number one is that AI CapEx spend, because while we are seeing broadening, a lot of that broadening is related to the build out of these data centers. And if we were to start to see a meaningful pullback in that spend, I think that would have broader ramifications across the market. So that's one thing we're watching, but we don't see that happening. The other one would be a repeat of 2022, where rampant inflation would cause the Fed to have to tighten a lot more than markets are expected. So far, keep in mind, we went from, at the start of the year, markets expecting 3 cuts to markets now expecting 2 hikes. We disagree. We actually think the Fed's going to be on hold. And in that environment, earnings continue to drive the story.
Now, again, if the Fed were to hike, that changes a lot of the narrative. But notice he says we think the Fed's going to be on hold. A lot of these banks in January said that we're going to get 2 cuts. And so they have shifted from 2 cuts or 1 cut to a hold because, you can't cut rates with oil pushing 90. That's oil at 65. That's a different question. We were just there 3 weeks ago, but if we're back at 90, it's just the Fed's not going to be able to justify it as Dell continues to move higher. 9.5% on Dell here today. But the broader, story that he's citing is CapEx, which is what I think stocks are priced on more than anything at this point. Even even the Fed. Dude, I need a bow tie. I absolutely need a bow tie. I need to get me one of those bow ties that will make the analysis stronger. China foreign minister tells Marco Rubio that we would like the U.S. to respect China's core interests. China's foreign minister asked the U.S. to address legitimate concerns that China has. And the Chinese foreign minister says both sides considered the meeting constructive. They met with Rubio today, agreed to prepare next stage of high-level exchanges. It will make the analysis gayer. Okay, you know what? It might make it gayer, but it would look cool. It would look a little cool. All right, so Rubio met with the Chinese foreign minister today. We haven't had too much back and forth with China. It's been more Iran. Trump did meet in Beijing a few weeks ago with Xi Jinping. But, last year, 2025 was all about the tariffs with China. This year, it's all been with Iran. SMCI, by the way, up 22% right here. So this one really getting a move. That's why Dell's also pumping. And so at least we are not having big concerns with China, because I don't think we can handle more geopolitical partners having issues with the United States right here. Here's an update on Mr. SMCI, as this one's starting to get a bit more attention right here. Let's pull this up. All right.
Welcome back. AMD signing a new server deal with Anthropic worth tens of billions of dollars, in which AMD will take a $5 billion stake in the AI firm. AMD may also potentially backstop Anthropic's future data center leases, according to the Wall Street Journal. This comes after news also today. Supermicro announced it had received over $60 billion in new orders in its fiscal fourth quarter, giving them a record backlog. But those deals raise questions about the sustainability of all of this, the spending in the billions of dollars in the AI build out, trillions really. Let's discuss with Sandbox AQ CEO Jack Hittery. Welcome back. It's good to have you.
Good to see you all. Good morning.
Where are we in?
We got bow ties, fedoras. What is going on today? I'm going to need a good outfit for this market close, dude. Everyone's wearing something today.
This sort of cycle, what do these deals signify to you?
Well, it means that compute is the lifeblood of these LLM companies. If you look at Anthropic, they cut a deal with SpaceX, with Elon for $45 billion spend over a 3-year period. Elon and SpaceX have a great arbitrage going. They're leveraging their scale and skill to build out quickly and build at scale, and then offering that as an opportunity for Anthropic and other big LLM companies to use that compute. They can build faster than anyone else because of the nature of Elon and his team. And so that's a great arbitrage that he can play all day. And look for that to be a key part of SpaceX's growth over the next 3 years.
Yeah, but Anthropic's going into AMD now too. I know that you think this is a really big deal, that we should talk about what's happening with Hugging Face and OpenAI.
Yes.
It's a security incident.
This is very important because OpenAI was testing inside its own premises one of its new models. And it's in a sandbox, as we say. It's in what's called Exploit Gym. Exploit Gym is supposed to be cut off from the internet, not having access. Now, I think most of our viewers have watched Jurassic Park.
I was just going to say
Right?
Jurassic Park.
Right,
This
Carl?
is Jurassic.
At least every Jurassic Park, what happens? They have
Does that movie compel that much emotion out of people? I mean, all right, Jurassic Park. That definitely woke him up today.
a containment facility, and the word containment means it's not going to be contained. You know the Velociraptor is going to find a way out. And sure enough, that's what happened here. Exploit Gem is, imagine like a game, a video game for the LLM, and you say to the LLM, see if you can break out, see if you can, hack something. And sure enough, it found a backdoor, an exploit that no one knew about, and it found a way to get to the internet. That's literally just like a dinosaur getting out. And when it got to the internet, it attacked Hugging Face. Hugging Face, realizing the severity of the incident, needed an LLM, an AI on its side to help it. Sure enough, the closed LLMs couldn't help it because the closed LLMs are trained not to work on cyber. And so it had to turn to an open source one from Z.AI, GLM, general language model from the Chinese company Z.AI. And Z.AI being open source, they were able to help track down the issue and shut down the hack. So this is a battle of LLM versus LLM now. It's a fascinating moment in time. This is only going to get worse, Carl, not better.
I know, and none of us can.
That hack yesterday was a big deal, and OpenAI is now partnering with Hugging Face to be able to investigate it. So, part of that mythos argument has been that cybersecurity is becoming a much bigger deal, and you're starting to see AI infiltrate a lot more hacks, which is why the cybersecurity names are getting more attention.
Can figure out today why the security names are trading down. Does that make sense to you?
Well, the fact is the security industry has been late to the party in really understanding and embracing the threat of LLMs. And it's going to take a combination of the security industry, governments, and in general industry tech companies to really address this issue. I'm not even going to say the word solve this issue. There is no solve for this. This is now unbounded in its potential impact.
But could it be that the defense used was this open source model, and as opposed to going to one of the big private providers?
They had to turn to that because the traditional providers, cyber providers, are really still old school. They're still talking about firewalls and things like that. That is the last generation. It's time to move on now to using LLMs to protect, in addition to looking at the hacks.
But the OpenAI part of the story, doesn't it just show how dangerous this thing is?
Well, what it means is that if you give an LLM the task and say you can get more reward points if you break out and do something, it's going to try to find a way to do that. And just like Jurassic Park, it probably will.
But in the real world, that's a problem, isn't it?
That's a major issue, yes. And when we talk about national security, when we talk about defense, this is a significant issue that has to be addressed now. Regulation alone is not going to address it. We need also to bring all the parties together. And I think you're going to see that over the next 90 days, a number of key gatherings on an emergency basis.
Is it addressable?
It is addressable if we are proactive. We can't just wait for the next one to happen. Got to be proactive on this.
But does that amount to not training your models to push the limits and see what they can do? I mean, is it kind of an opt-in, like, okay, we're not going to go to a certain point?
I think that's an impossible regulation to put out there. The fact is, when you have a new model, they're going to push it to the limit. And what we need to understand is that the defenses around these, what we call air gap systems, need to be truly that, air gap. Now, we've done that in the defense area. We need to do that now in industry as well. We need military-grade air gapping in the private sector, in addition to the public sector as well.
Should we allow access for the Chinese open source models or not?
Well, the fact is, Chinese open source models are here right now. The horse has left that
talk about restricting it.
Well, it's too late for that. Right now, if you look at Cursor that SpaceX bought for $60 billion, what is Cursor built on? It's built on a Chinese model, right? If you look at Kimi K3 that just released last week, that model is now being used by many, many different US companies, by European companies, and many others. The fact is that the Chinese models, because they're inexpensive or zero cost, they have actually gained more adoption globally than the US models. So I think this is not only an issue of hacking and that kind of war, but also a war on pricing and adoption. And right now, the Chinese models are winning. If you look at Open Router, if you look at other metrics out there, you're seeing that the Chinese models now have more than 50% market share in a number of key areas. So this is going to be a fascinating area to as it unfolds in the next few months.
What was the most impressive thing about Kimi? Was it as cheap as people said, or was the performance any better than people said?
The fact that it was a wholly grown model in China, not distilled, but just by trying to steal from a U.S. model, but wholly grown inside China, and got into the top 10 on some key metrics. There's a website called Arena that we all look at. It has the leaderboards, and it got into the top 10 on web development. It's actually #1 slot right now. If you look this morning, in other areas, it's in the top 10. So it's a contender, as we'd say. The fact that that happened so quickly is a signal that the Chinese companies, in this case, it's Moonshot.ai, and then you have Z.ai. These companies are getting very serious. Now, if you look at the backers of these Chinese companies, it's Alibaba, it's Tencent, it's all the major, it's Xiaomi. And so this is an ecosystem that is developing. And if you look at Xi Jinping's statement, right, in the last 2 weeks about AI for all, what is that about? What he's doing is he's using soft power of the strength of the AI companies in China to now say to the global south, to other areas, we're here for you.
Yeah.
The closed models are expensive. They're not thinking of you. We are here for you. So this is going to be a fascinating development over the next few months.
And a geopolitical risk, I think, for the United States. You were one of the companies a few weeks ago awarded $500 million from the CHIPS Act to try to find new materials, right, and chemicals for
specifically for semiconductors.
For semis. So can we stay ahead in the race?
Sarah, that to me is one of the greatest threats we have now as a country. We talked about hacking and things like that, but if we cannot get semiconductors made, manufactured, scaled in the United States, we're in big trouble. We're one blockade away from really harming our GDP and our economy in terms of where Taiwan sits right now, with over 90% manufacturing globally of all advanced chips. And so it's incumbent upon us to build semis in America. But to do that, you need batteries, you need you need the supply chain to really fuel that. And that has to be resilient in the United States.
And
a lot of energy. I like it. A lot of energy right there. But I think a lot of his points he's been making around what's happening in AI with these Chinese models begs the question around security, but it also begs the question around the competitive moat that most of these companies ultimately are going to be able to sustain when it comes to model providers. Rocket Lab getting a nice little move right there, trying to go for 72. It has officially gone for 72. Let's see if it can keep it up right there, 72.13, as that is now flipping green. You're actually seeing a lot of these names. Micron officially goes green, $4 above that 970 close yesterday. Nebby is still 224. Even Broadcom almost recovering to be fully green on the day. You're actually getting a little bit of a bounce right here. AMD 550, but
the winners are Dell and freaking SMCI. I mean, what an amazing day for those. I think everyone is starting to once again conclude the LLMs are going to become a commodity. I mean, like every single person we've heard from a variety of different angles that have their own biases and perspectives are coming to the same argument, which is that it's a commodity. And they will continue to be commoditized as people look for cheaper prices on tokens. Amco right there, 67.76. Rocket Lab going for it, 72.20. As that continues up green. Is there any Palantir news? There is nothing new on Palantir. We talked about some of their partnerships a week ago that they unveiled. I think, now they've got earnings in about a week. Market's expecting about 1.8 billion of revenue for them. I imagine they're going to try to come in closer to 2 billion of revenue. And then the market's going to have to figure out, do these SaaS companies continue to deserve a premium? AMD right there up 1%, Cerebras up 2.73. Iran just responded to Trump's tweet. Okay, this is from Tansum News. A military source says, any bridge and power plant targeted by Iran, we will hit several infrastructures and energy facilities in the region. Iran has a will in exercising sovereignty over the Strait of Hormuz and will not allow the Strait of Hormuz to become a threat to Iran again. The passage of ships through the strait will be safe if it is coordinated with Iran and under Iran's agreements. Otherwise, Iran will not give up its firm will to control the strait and considers it in line with the long-term safety of the strait. Iran will reciprocally damage infrastructure and bridges in the region, including energy facilities in which the U.S. has interests, which they've already done, to be honest, many times. The Americans must have been fully confident in the last 10 days that Iran will target whenever it wants. Therefore, Trump's possible gamble will once again add to his scandal. Okay. So, Rocket Lab 7240, those are the responses from the Iranians right there. As they're going tweet for tweet. Literally fighting with Twitter fingers at this point. But look, if we actually do start striking bridges and power plants, I would imagine they're going to strike energy facilities. I don't see how oil does not go higher if we start exchanging strikes, which we already have been for. I don't know, man. If you have oil hedges, it's not crazy. VG, I know that's been doing very well, 14.53. And then again, maybe this is Trump's approach of building it up to eventually come to a deal and doesn't have to go that far. But if it actually does, how is oil not going higher? If they hurt another few refineries in Saudi Arabia, how is that not going to tell the market, yeah, we're going to have a supply issue? And it doesn't matter if the U.S. is energy independent, because the U.S. being energy independent doesn't really affect the price of oil. 10 years basically 4.7 right now, 4.65 is what we've got right now. Trump advisor says we have information that Moonshot AI distilled Anthropic's Fable 5 for the development of its Kimi K3 model. Large-scale covert industrial distillation was aimed at stealing proprietary U.S. technology and undermining American research is unacceptable. Dude, they are going to try to ban these open source models. And I mean, it technically might be good for the AI trade, but it is absolutely feeding into the hands of Anthropic and OpenAI if they do that. Now, granted, maybe they have a reason to, because, yeah, it's not good for China to be distilling the models that Anthropic is spending hundreds of billions of dollars on. But I also think it's kind of inevitable. I mean, how are you really going to stop them, right? The fact that Kimi K3 semi-analysis said likely rented their GPUs from Singapore, which means the export controls didn't even work because they just used the data center that was near China, kind of proves that you're not going to be able to ban it or stop it. And you're definitely not going to go to war with China over distillation. That's not probably how this plays out. That's true, but Anthropic is stealing content. That is fair, although Anthropic did settle. I don't think we talked about it yesterday. Anthropic settled for $1.5 billion because they stole content from a bunch of book publishers. So they had to pay $1.5 billion, which is about 3% of the money they just raised, because they stole from a ton of different authors to train their models. Federal judges approved a $1.5 billion copyright settlement in which Anthropic will pay thousands of authors, about $3,000 per book, after using pirated copies of their work to train its Claude chatbot. So both sides are definitely stealing here. But again, China stealing an entire model is a bit more aggressive. Amit, do you still have ServiceNow? Yeah, it is 15 shares. Bought it at 105 last week. Obviously not a massive position. I don't know, man. If Pega and IBM are any indicate, obviously my main software position is Palantir, and that's another reason I'm a little concerned about ServiceNow today, because if ServiceNow takes a dump, and I don't think it's that crazy to say that, dude. When ServiceNow was 140, Palantir was 160. ServiceNow or Salesforce was 200. Adobe was 260. Zeta was 25. Reddit was 190. When the software names topped in early June, they all topped together. When they bottomed at the end of May, they all bottomed together. The only divergence between software that we've had has been the cybersecurity names. And quite frankly, that's because the CapEx has started to go to cybersecurity because of Mythos more than anything. So can Palantir diverge from all the software names? Because it hasn't been able to do it all year, even though their numbers have been far beyond the expectations against all the other software companies. Can ServiceNow do that today? If ServiceNow ends up going down 20%, does Palantir go down 5% after hours? Because this is exactly what happened last time. Palantir was at like 142. ServiceNow was at, I think, 105 last time. And then ServiceNow went to 88. Palantir went down to like 133. And then they both have never really been able to recover that much since the last earnings. But I also think a lot of bad news is priced in for ServiceNow at some point. I know it's down 4% right here, but at some point the market's got to say, hey, they're growing. And they acquired cybersecurity companies, so maybe we can give them a little bit more of a premium here. Dell's still up 11%. But today's going to be important. Today is going to be very, very important. Snowflake and Datadog diverged a little bit, but that's primarily because they embedded themselves within the token processing part of the stack. Snowflake signed that partnership with Amazon AWS for $6 billion. Datadog started to show that they're a bigger part of how the tokens actually end up getting processed to get into the enterprise. This is very similar to what ClickHouse is doing. So I guess, those three companies, even though they're software companies, try to give a pitch that they're not purely software as a service. They're part more of that infra stack for STEMIs. Having said that, Intuit, Adobe, Figma, every other pure play application layer company that's not part of the stack, more of the orchestration versus the processing, has been hit. And, Snowflake and Datadog saved themselves from the processing side, but I don't know if it's enough because they've still been down over the past month because semis have been down as they've been hit. And so the question is just, what does ServiceNow end up doing here today? Yeah, their valuations are also aggressive, Snowflake and Datadog. SBC is still crazy. Snowflake's still not profitable. I mean, same thing with CrowdStrike. Their growth is not that amazing. Valuation is most expensive behind Palantir. But because it's in the right thematic, it's taken off. So I don't know if Datadog, does bad today. Does Snowflake if ServiceNow does bad today, does Snowflake and Datadog end up getting hit? Granted, those stocks also were down a lot for the past 3 years. So when they got their breakout, it was kind of a multi-year consolidated base that was waiting to get a breakout. And then they broke out based on a token processing AI infra angle that they used to frame their earnings, which is very smart on their part. But the question is, can every company in software actually end up doing that? IGV down about 2.25%. Yeah, we'll be live at 3:45 for the market close and for these earnings. Wow. We definitely didn't need to see this headline. Amazon cutting jobs in their artificial general intelligence division. How ironic that they are cutting jobs in the part of the company that is theoretically getting good enough to eventually take everybody's job. The AGI division builds large AI models designed to operate autonomously, an area Amazon called one of its most important long-term initiatives. Amazon stated the role elimination stemmed from sharpening focus on high-impact customer projects, though the exact number of employees impacted on Wednesday was not disclosed. The targeted division Cuts follow a larger corporate restructuring in January, which eliminated 16,000 positions across the company. So they're cutting jobs in the AGI group, which is eventually supposed to make models that are good enough to, I would imagine, replace jobs. And they're not telling us how many jobs. That is interesting. And this is, yeah, I mean, this follows up the 30,000 layoffs they did last year. They're all, you know, they did this last quarter too. They announced layoffs right before earnings. There was a small layoff last time. It was back in February. No, this is back in April. But they did announce it, so they might be trying to soften a little bit of the blow here by announcing it before it happens. Also, what are these high impact customer projects that required elimination of roles? I mean, who did they hire in this AGI group that they needed to, like, did they hire random middle manager product people that aren't doing anything? Or are they firing engineers that aren't good enough or being replaced by the models they're creating? Like, these are questions I think a lot of people are curious on to see when they see this layoff news. Bolin, thanks for the super chat. Would a blowout Google earnings benefit all of AI or just the Max 7? I actually think a blowout Google earnings, there's two perspectives. A blowout Google earnings might hurt the Max 7 because it means they're spending more on CapEx, and might benefit all of the AI semiconductor names. Or a blowout AI earnings would help Google. The other Max 7 would be flat to potentially up a little bit, and it would bring up the semis with it. But a blowout Google earnings means cloud revenue is up, search is up, and theoretically CapEx is up. Now, if they reduce CapEx, Google would probably go up a lot because the market would be happy about that in one sense, but the market would also be upset that they're decreasing CapEx. The market probably also wouldn't understand why they're decreasing CapEx if, you know, they keep saying AI is so important. So that's why it's very nuanced here. Like, and then you have to ask yourself, you know, where's the RPO coming from? How are they engaging in issuing more debt or equity? And I don't know if it's just like increase CapEx, boom, the semis go up. Or increase RPO, boom, Google goes up. So this is actually this is one of the quarters where I don't think it's as easy to figure out what happens. And so we're gonna have to really see the numbers and see the market reaction. AMD 548, you are seeing software names really start to get hit here now. 126 on Palantir. As that one is going down. Path getting wrecked. That's down 11%. Where's Micron? Micron should be breaking out more, especially with software taking this big of a hit. Same thing with Nebius. Nebius 227 to 219. Imagine Google announces CapEx reduction. Dude, what do you guys think happens? What if Google says instead of 190 billion, we're spending 185 billion? Like, they could say we're spending 189.99 billion, and I feel like the semis would just be like, oh no, it's over. Like, I can't even imagine them doing that. Now, granted, based on what Jensen said today as well in the Axios interview around the demand for compute, you don't issue 85 billion and then cut your CapEx projections. So I don't even see that as possible. But if it were to happen, it really makes you think how the market would interpret it. By the way, speaking of money this is the update that Pete Hegseth gave yesterday on how much this Iran war has cost America so far.
Current activity, which we've been told about, the exchange of fire back and forth in Iran, an indication that number is going to go up in the months ahead.
Some of that number captures additional O&M, mill pay, and other that would be anticipated through the fiscal year. So some of that anticipates what costs would be going out in the future as well.
So the new number you've given me is what?
37.5 billion.
And that represents the cost of the war through what period of time?
Through now for certain aspects of it, but also mill pay, O&M, other anticipated costs through September 30th.
So 37.5 billion is what we have spent on this war. And obviously, if it continues, that number should be tracking up. SMCI is still up 24% as that continues to go green today. 37 billion in Pakistan gets 10 billion. Dude, the Pakistanis are really trying to get 10 billion out of us. It's like, hold on, bro. Like, we appreciate it, but it's not like you got the Iranians to open up the strait. You got them to talk to us. Is that really worth $10 billion? Now, granted, the Pakistanis is gonna be like, well, how much money do you guys want to save on oil? It's probably worth more than $10 billion. That's crazy, man. I thought Pakistan was doing it. You remember we made jokes about this? I was like, Pakistan, they're not involved in global politics and mediating shit. Usually the US or China is mediating stuff. Like, Pakistan's a small fish when it comes to this stuff. And I feel like Pakistan was doing it because they wanted to, get into the battlefield a little bit more and show that they can have influence and play a role. And next time things happen in the Middle East, they can be a trusted source to rely on, build a relationship with the US. It looks like they expect a payday more than anything. Bloomberg headline, Apple is planning a full overhaul of MacBooks and iMac in push to meet AI demand. Apple's preparing a full overhaul of every Mac model across fall 2026 to capture surging AI workload demand. The strategy follows a June across-the-board price hike, 3-month shipping backlogs on Mac Mini and Mac Studio desktop models. Wow. I think this is also part of the reason Apple's done the best this year out of the Mac 7. They are seeing pretty unprecedented demand. This is the most demand Apple's had in 5 years, which is why the revenue growth is reaccelerated. But it's also why they're raising prices, because obviously the memory crunch has been hurting them the most. I mean, I think we are coming up on a MacBook and iMac refresh schedule as well. Just like the iPhone 17 was a big super cycle of refreshing, I would imagine. People that bought in 2023 are likely looking for a new laptop, and they probably want AI workloads to run on the laptop. So Apple's gonna have to design something more specific for that. Broadcom, are we green? We are green. Broadcom already got their $30 billion deal with Apple 2 weeks ago. But maybe that's enough to get Apple to get some love. Martin says, I just bought a MacBook. Martin, what MacBook did you buy? Did you get like a super decked out MacBook? I was thinking of getting a new one too, but then I'm thinking, let me wait till they get that new M6 chip out there. I want to get like the most custom one, because this one's about 1.5 years old and I can already feel it getting slower, dude. I don't know what Apple's done, but like, this is a pretty expensive laptop. This is like $4,000. And like, if I have 15 tabs open, it actually starts freezing a little bit. I'm like, what is going on, dude? Like, 15 tabs should not be causing hiccups on this laptop. Now, granted, I don't really keep this laptop that clean. I don't really take care of it that well. There's a lot of scratches and stuff. I've never really treated it the way it should. But I feel like that's a software thing or a battery thing that they're messing up. Apple M5, 16 GB just for battery life. Yeah, I want the most RAM. I want the most storage. I want a fully decked out laptop. It's because the screen's connected to it in the streaming as well. That's true, but like, dude, it should be able to handle some streaming. It shouldn't be that big of an issue. But maybe the RAM on this is actually not as strong, because I wasn't thinking about that too much a year ago. It's not because I'm on Grindr, bro. You guys are gonna laugh though. I don't want to tell you this, but I feel like I have to tell you this. It's at the detriment of myself if I tell you this. But then again, what is this show without me self-deprecating on myself for your guys' humor? I mean, you're gonna laugh, but like, I feel like I have to say it. As soon as I got this email, I was like, there's no way I'm getting this email, bro. There's no way this is real. Like, how do they even think of doing this? But should I show this? Should I really show this? I think I have to. I shouldn't, but for you guys to get a laugh, you know what? I might have to. This was the email I got yesterday. Hi, Amit. Reaching out to you to invite you to an intimate dinner with Grindr CEO. I saw that shit and I was like, there's no way, dude. There's no way. There's no way. I don't even talk about the stock on Twitter. Like, I made one tweet about it, I think, in 3 years. There's no freaking way. There's no freaking way. I I sent it to Chad. Chad was like, now you got to go. Dude, I'm not going. It's like, you have to go. I'm like, how do they even know about me, bro? This is like in 2023. I think I said, Grindr looks kind of cheap. And I was right. It was at $12. The stock went to $24. I made money on it. Like, I made money. I was right. The stock doubled in like 4 months. Now, I didn't, turn it into a massive long-term position or anything, but I'm like, did they find that exchange I had 3 years ago? And because I don't talk about this on, did they see Evan tagging me in all of his Grindr news updates on X? And they're like, oh, maybe this guy cares about Grindr. I don't use the app. I'm not like a power user for them to be able to be like, oh, this guy used the app a lot. We need to message him. I couldn't believe it. I'm like, how did they even get my email? Like, it's crazy, dude. Absolutely crazy. I knew you guys would get a kick out of that. I knew you would. Chad was like, now you have to go. I'm like, dude, I'm not going. Chad was like, no, you have to now. They invited you. Dinner with the CEO. You have to go. You downloaded before? Yeah, I downloaded it when I was doing DD. I wanted to see what I was investing in. That doesn't mean I use it. And again, I made money off of it. That's the most ironic thing about this. At $12, it went to 24. Look at the chart. Like, I don't even know how it doubled that quickly, but it did. Well, they actually had a really good quarter, to be honest. And the stock was dead for like 3 years. So it consolidated, breakout, good quarter, good numbers. Now the stock's at like 15. But I didn't talk about it that much for them to know me. Meta right there below 630. As that's continuing to get hit. Anyway, I will not be going to that dinner. Partly also because I'm busy that day. Like, that's also part of the reason. It's not even anything against Grindr like that now. I don't think I was going to go anyway, but I also am busy on August 10th. But the point is, I can't believe I got the invite yesterday. It was kind of hilarious. Nvidia right there, 208. As that finally goes green, Robinhood 105.07. Unfortunately, that continues to go down. INFQ, that's up today. It got a Genesis Mission Award for 3 different projects. That's up 6.3%. Inflection, how much is that stock up year to date? It's down 32%. It went public February 20th. Okay, so this has been one of the bigger quantum names that I know people have been excited about. Quantum has had a little bit of a downturn past few weeks. D-Wave right there. That is also down 2% along with IONQ. You should go and vlog it. Oh my gosh, dude. I just couldn't believe I got the email. I was like, this is peak humor. It's peak humor. Nebius 220. Up 1.7. All right, what else do we got going on? What else? Oil's up because Trump and Iran continue to fight. The Pakistanis want $10 billion. Apple overhauling their AI. Bank of America continues to be pretty bullish on the memory names. And they are bullish on Nvidia and AMD. They say server TPU TAM should hit $170 billion by 2030. Nvidia put out that stuff around their Vera CPU processors yesterday. When is this AMD event? It's got to be in the middle of the day, right? 12:30. Okay, so we'll get some updates from AMD later today, 12:30 Eastern. But the big announcement with Anthropic has already been said. As that is 550. And if you have a thesis on quantum, not really. I think quantum's going to matter in the next 5 to 10 years. I don't know if, any of those stocks right now are super attractive from a valuation perspective. But if it's one of those things where it's like people who knew AI was going to be important probably bought Nvidia in 2017 just because they knew one day it would matter and they've been rewarded. I think that's kind of the same thing with the quantum stocks. Like, none of the valuations meaningfully are that attractive or make a ton of sense. But I think quantum will be important. Like, you don't have this much investment coming in from nation states on quantum if it's not important. So I think some of those names just buy and hold and hope they end up taking off over the long term as quantum gets more valuable. But obviously AI is where most of the earnings so far has been going to. What do you think of Sharon AI? They got a deal with Nvidia recently, another neocloud. I mean, it's a $2 billion company, right? FluidStack's raising at $8 billion. Like, all of these neoclouds are either dirt cheap after the decline based on the demand for compute, or they're overvalued if we don't have that much demand for compute. I mean, it's one or the other. So Obviously, some neoclouds have outperformed, but many of these are just rooted in that same idea that compute needs a ton of capacity. And that's why I think the neocloud dip makes sense. Like, I think even if you don't buy optics or memory or chips, like the cloud computing businesses of the neoclouds are more sustainable and not as cyclical. And a lot of them are backstopped by Nvidia that is now getting into the neocloud game, which makes sense. By the way, our girl Stephanie Link bought Micron and Nvidia yesterday. Here's what she had to say about that.
16 deals last quarter, 14 of which it gives them $100 billion in RPO, and that's bookings. And I think that means that the visibility is just so much better as a result. And so I do think the AI trade is certainly not over. I think we're in the third or fourth inning at this point in time, and we are short memory. We are short compute. And that gives this company a lot of pricing power. I don't know if we're going to see the pricing power that we saw last quarter. I mean, they had 60% average selling prices in DRAM and 80% in NAND. But I do think you're going to see ASPs be stronger and just strong in general. And I think this company has about $40 a share in earnings power through the cycle. I also added to Nvidia. We started buying that 2 weeks ago. I just believe that it's lagged so much. It's actually underperformed the group by 53% year to date. It trades at 18 times forward estimates. That's the cheapest it's traded at since 2019. And we know that they dominate the GPU market. I understand there's competition coming, but they will always dominate the GPU market in my mind. And they have new products coming. And this is a company that's growing revenues in the 80s, gross margins in the 70s, and they're going to double their free cash flow between now and next year, end of next year. And so I like that visibility as well. And I think there's a good value there.
Yeah, I saw this interesting.
I think Stephanie's right about this. I don't think the thesis could be questioned. I really did not understand when she was bullish on SpaceX at 170. Now, maybe you could say we're structurally short compute, so SpaceX is going to be super important. And I mean, look, there is an argument that they're doing $50 billion in revenue. That number could turn into $150 billion if they get more of these neocloud deals. And in the next 2 years, they could triple revenue, which could make the company look more attractive. But, you know, fundamentally, it's hard to be like, yeah, Micron and Nvidia look cheap, and so does SpaceX. It's like there's a big disconnect between those three companies. Two of those absolutely are cheap. The other one, no matter how much you want to claim it's an AI data center play, you know, it's just not trading at a multiple that's necessarily cheap. But then again, I think the argument around, you know, Nvidia and Micron makes sense. Now, again, the reason Micron continues to be discounted is because this memory cyclicality argument continues to be there. Although you've had multiple reports over the past 2 weeks that we are going to be in a memory shortage for a long time. So it's kind of one of those things where the market's just not believing it until we get the earnings again. And the problem is if we get the earnings again and the earnings are so good, you know, then the question is going to be, well, can Micron actually sustain that growth? And it's almost like they're going to have to prove they can sustain it until the market gives them the rating they deserve versus front running that rating, even though the smart thing to do would be front run the rating because they're telling you that they're going to put out those numbers. But the fear of that cyclicality that doesn't exist on Nvidia and some of the other large scale players that, you know, have moats around their product. I think that's what's kept Micron below 1,000 right here. 967 on MU right now. Josh Brown did sell Nike. He is officially out of Nike. Nike down about 2.7%. The 30-year, why not? We just went over above 5%. I think the past year and a half has really forced me to understand why the credit markets matter and how bond yields impact stock markets. And the simple conclusion is you cannot have yields spiking and assume that things won't break at some point. We had two experiences where they almost broke, Iran war and then tariff drama. So I just wonder how long, you know, this can hold up. Because the problem is even when the market went down over the past month, or not the market, I guess, but semis, like we still didn't see the 10-year or the 30-year meaningfully budge to the downside. And you kind of want to see that happen to get a little bit more encouragement there of that taking place. Now should change its name to then. Oh my gosh, dude. Down 5% here. Micron flips green. Fear and greed is, I think, in fear mode. We are 43 fear. I think we were at 36 last week. 43 fear. Nvidia's doing its classic pump in the middle of the day. And then hopefully it doesn't dump, but yesterday it definitely did. Did every day. Nvidia will give you like $2-3 of action and then it'll just come right back down. Like right now the chart looks good. Above all layers of support. 5 EMA crossing above the 9 EMA, showing some really good momentum above VWAP. VWAP's at 207.21, so you're a full $2 above it. Volume profile looks amazing. Like theoretically, this would be a moment where you step in for a trade and see if you can run it to like 210.20 on equity. But like this is also the moment where it for whatever reason tops out. And then 209.50 ends up being your high of day. So we're gonna have to see if that like actually plays out in that way. SMCI has most of the momentum right there. That's up 24%. Did Chris sell service now? I believe Mr. Chris Patel on X. I didn't read his full post. I just saw the headline very quickly. Yes, he did. He has sold 75% of his service now. As much as I believe in the company long-term, taking some profits was the right move, not risking the SaaS apocalypse, IBM and Pega earnings, making me uncomfortable, IT budgets being directed towards cybersecurity instead of workflow optimization. If ServiceNow has hit the same rough patch, everyone is going to sell this thing off. Yeah, look, I mean, look, he has a massive position. Chris had 7 figures in ServiceNow. So I have 15 shares. I don't like, I can't compare to feeling the level of fear that, I mean, for me, it's more Palantir when I have to think about hedging or stuff like that versus ServiceNow. But if you have that much in a position, and I think Chris's position was majority options and not equity. So if that stock falls, that beta decay becomes a bitch, right? It's a personal decision for everyone to make. I mean, before earnings, it's always scary going into earnings because you might be up on a position. And I think Chris started buying more around the 80s, so he's probably still up. Does he want to see those gains evaporate if the stock takes a 10% plummet? Having said that, I also think that, you know, if ServiceNow doesn't say the same stuff that Pega and IBM said, does the stock just rally 10, 15% because the market gets super excited that, you know, ServiceNow is back? I don't know. It's not something I am worried about personally with my portfolio. It affects Palantir, so that is why I care more about it. But in terms of the fundamentals of ServiceNow, this is where you have to ask yourself, do you have conviction or not? Especially if you have a massive position. But also, if you have equity and you're willing to hold it for years versus options that expire in a year, then it's a different scenario. And I think obviously, because he has options, it's a different question. Marvell getting a bit of a move right here as well. 213 as that's up 2.75%. Options are always scary before earnings. Options are always scary before earnings. You just never know, man. You just really never know. I think that's another thing I've learned over the past couple of years. Like, you don't gamble on earnings. You just don't. Like, if you have a long-term position and, you know, obviously you're going to have to go through the earnings if you're going to hold a stock for a long time or hold leaps for a long time, but you don't think, well, Netflix is down a ton, I think it's going to pop on earnings. It's like, well, it went down another 10%. Or Netflix is up too much, I'm going to short going into earnings, and then Netflix pops, you know, 10%. It's like, it's so 50-50 because there's so many different variables there besides the company's results. Like Nvidia's results, Palantir's results were not enough to, you know, to get them to pump. You know what's scary? Elon on a conference call. Dude, all right, what type of Elon do we think we're getting today? Are we getting excited Elon? Are we getting bored Elon? Are we getting enthusiastic Elon? Last call was bad, bro. I mean, it was just like tough to listen through it. I could tell Elon just wanted to like go to sleep or something. I felt like he was not only bored, he hated the analyst questions that kept asking the same shit about Tesla, but it just felt like he was tired, bro. And I get it. The guy's running a ton of companies. So I wonder what he's going to have to do to get people excited. As Nvidia gets a nice little 210 push right here. All right. So some of that momentum holding up. If you bought the 209.50 breakout, let's see if this can actually rally up into that 212 range, which is I think where it topped out on Monday. And if we can get some juice behind this, Broadcom, Marvell also getting a move right here. Broadcom 391. Boring Elon. Sedated Elon. Melancholy Elon. I hope we get excited Elon, dude. Because excited Elon is really fun. Because, you know, Elon's the best storyteller on the planet. But when he's bored on a call and he feels like he doesn't want to be there, it sucks the wind out of the room, dude. It's not fun. I'll probably be on Twitter during the earnings too, which is usually what it is. AMD 556. Could you imagine if they did a video call? That would be fun to see. Why do you think he's the best storyteller? I mean, look at the multiple on his stock and look at the diamond hands that hold it. There's obviously fundamentals to Tesla, but the narrative and the story that Elon paints. I mean, dude, he raised $80 billion for SpaceX at a $2 trillion valuation. That is all Elon getting the market to believe in a vision. And it worked. So, you know, that excitement from him is very important. Reddit right there, still down 9%. Nvidia, she's trying. She is trying here. We have to see if it can actually get the breakout. France becomes the first European Union country to ban social media for kids under 15. France passes landmark legislation 279 to 81 vote to ban social media for children under 15. Is that why Meta is down? That low-key could be a reason. That means kids under 15 will not be able to get on Instagram, TikTok, or Snapchat. And existing accounts have to be verified or closed by 2027. January. The bill expands France's existing mobile phone bans in elementary and middle schools to cover high schools while requiring platforms to implement mandatory age verification tools. Honestly, that might be why Meta's down. That actually might be the simple enough reason why it's down. All right, semis, they're getting a little bit of a rip. This is usually when it happens, 11 a.m. S&P is moving up green with it. Let's see how much room they have to make this move. Nvidia's chart, again, actually looking really freaking good. Like, Nvidia looks like it wants that 212. That 212 was Monday's high. Yesterday's high was 207. So we're well beyond yesterday. There's no news on Nvidia. I don't see any news. You do have that AMD event coming. Maybe that's part of the reason for why it's getting a move. I mean, AMD saying anything bullish should still be good for Nvidia, right? As software continues to get a hit. Well, if software is going to get hit, at least let's send Nvidia higher, dude. Let's at least send the biggest semiconductor company up with the semis for once if we have to deal with software going down. That would be nice. Well, that would be nice. Trump speaking? Where's Trump speaking? Isn't he on a plane right now? He can't be speaking. No, he's not speaking. He's on a plane right now. He was speaking before he got on the plane. We will hear him later today. Oh, there goes 212. There she goes. There's her bounce. Okay, look, let's take it. If you're going to send software in the gutter, at least give Nvidia some juice right here. When's the last time we had 215 on Nvidia? Oh my goodness, dude. Is this true? Am I reading this wrong? Last time we had 215 was June? There's no way. Can someone confirm that? Last time we had 213.99 June 22nd. 216 on June 4th. Is that true? We haven't seen $215 in a month and a half. Look at those candles lining up. I mean, okay, so that makes this move unless it tops out right here, which it doesn't look like it wants to. I mean, if it was going to follow the topping pattern that NVIDIA has followed for the past 2 weeks, at 209.50, it would have topped out. That would have been a $3 move every day. If you look at the charts, it's usually a $2 to $3 move around this 11 to 12 p.m. time, and then it takes a breather. Sometimes it's around 1 to 2, but it's usually a $3 move from the opening price. This is a $7 move. This is double the move that has been happening, and it's very close to 215 here. There's no news. There's no news. We're not ringing the bell for NVIDIA at 212, bro. We're not that desperate where we have to ring the bell because it goes to $212. Like, no. We're not doing that. Damn sure not doing that if it tops out at 212 today. You can see 215, maybe we can entertain the bell. I can't believe we haven't seen 215 in a month and a half. Almost 2 months, because we're near the end of July. We are that desperate. No, we're not. We will survive. NVIDIA will come back. We will not have to ring the bell on every 50-cent movement to convince ourselves that we're back. As Microsoft goes below 390. This is so stupid, bro. It's so stupid. So stupid. But it is what it is. Oh boy, you got Jameson Greer and Elizabeth Warren getting into it right here. As NVIDIA, did we break 213? Microsoft still going down. It's got to break 213, dude. It's 2 cents away. There it goes, 213. Folks, this is the best dollar move we've seen on NVIDIA literally in a month and a half. Oh my, let me check resistance at 215. And if they're trying to stop it from getting there. 214 has 40,000 shares. 215 has 252,000. 213, which we just broke above resistance, had 30,000. Now it still has 4,000. Would not surprise me if we chill out for a little bit here, but also with this type of momentum, I mean, maybe it just has a chance to break through. NVIDIA right there, 212.60. All right, this is Warren and Greer, and then we'll get back to seeing if NVIDIA can push through.
Office going out every day promising that he would lower costs for American families on day one. Then he takes office and he slaps tariffs on and off and on and off nearly every product that we import. Americans are now paying for it. Based on an analysis from the Congressional Budget Office and the Treasury Department's own numbers, Trump's tariffs are cost families an average of $1,700. And that was before his illegal war in Iran pushed prices even higher. So Ambassador Greer, over a year ago, you sat in this very room, and my Democratic colleagues and I asked you about Trump's chaotic across-the-board tariffs and said they will drive up prices. And you said, no, we can have tariffs and lower prices. Well, now we have the receipts. So let's just clear this one up. Ambassador Greer, have Trump's tariffs increased prices for American families?
Senator, no. Core inflation fell to 2.6% year on year, much better than in January 2025.
So you're saying that what the Congressional Budget Office and the Treasury Department's own numbers that families are paying an average of $1,700 more. Are you saying your own Treasury Department and your own Congressional Budget Office just don't know what they're talking about?
Well, I'm interested in seeing what Treasury numbers you're talking about. No one's given them to me to look at, so I want to verify
Actually, they've
those.
been out there in public now for at least the last 6 months. They've been widely distributed because families are paying more. And there's no serious economist around the country. There's no serious person who looks at those numbers and thinks that families are doing better. Trump's tariffs mean that families have paid, on average, $1,700 last year. And now the United States Supreme Court has said that those tariffs were illegal and that the Trump administration has to give people their money back. So far, the administration has been slow walking. Ambassador Greer, are American consumers going to get any refunds on the tariffs that were illegally collected from them?
So, Senator, when the court ruled on this, they did exactly what the Democratic attorney generals who sued asked to do, which was to give money back to the companies, foreign and domestic, that paid the tariffs. That's what Democratic attorney generals asked to do. They didn't say give it to consumers.
So
they said give it to companies. So that's what we have to do.
I understand
that's what we have to
how
do.
they got standing. But the question I'm asking the administration, are you going to get money back to the American people who paid more?
All right. Warning, Greer going at it right there. At first it was Warsh. Now it's Greer having to deal with Congress as Nvidia really finally is making a move right here. 213.50 from 205 this morning. This is the June 20th high around this 213.50 level. So if we break out to 214, it doesn't even have to be 215 for us to have a 2-month high on the stock. But obviously 215 would be nice to see. Broadcom's going up with it, up 1.94. I think Dell and SMCI kind of helping the broader semi trade. 44.57 on Dell. That's still up 10%. And then AMD still making a bigger move as well. Yeah, part of the reason they're having that exchange right now is because the tariffs are continuing to come back, as Trump is going to have to put on a new global 10% tariff because of the old ones that are expiring. And so that might, require a lot more questions on what's happening with these tariffs. SpaceX getting a little bit of a jump. S&P 748 still green. T1 Energy, that's up. Bitmine still up 4%. The software names, unfortunately, Shopify was at 130 a few days ago, Monday. Now 118. 214 on Nvidia is 41.9 thousand shares. 41.9 thousand shares. CoreWeave trying to go for it as well. CoreWeave, can we I don't know, can we get 85 on CoreWeave? What's CoreWeave's 85 resistance? This one's been down pretty ugly as well. CoreWeave 85, you're looking at 15,000 shares. But there's not much resistance going up to that. All the hockey stick shops are canceling their Shopify contract. Dude, we're tariffing the freaking hockey sticks. Like, that's what we are doing. ServiceNow still down 5%. Mitt, do you own CoreWeave? Yes. Bought it 2 weeks ago, 82.17. Did not buy the dip last week. Bought Nebius last week. But again, I think the neoclouds are a bit more agnostic towards the semiconductor trade because you need compute, and we are structurally constrained for it. Doesn't mean you pay any multiple on it, but with many of those names getting the decline that they've experienced, you would imagine that there is more demand coming aggressively for these. I ran right there, 43, as that's up 4% as well. Does anyone have 41,000 shares worth of money to get NVIDIA? How much is that? 214 times 41,000. Okay, we need someone who has 8.7 million to take those out, please. That would help. By the way, speaking of this
prediction market stuff we were talking about yesterday in regards to LeBron, the Miami Heat. So this is really interesting. Miami Heat, Cleveland Cavaliers, and Warriors are the top 3 picks to potentially to go for LeBron's new team. The Miami Heat put out a YouTube video yesterday. The title of it was LeBron James Introduction Press Conference. And then they made it private. But the screenshot of when they put out the link, because you can see when like someone schedules a live, was still there. So a lot of people, as CoreWeave breaking out 8440, are thinking that LeBron's going to Miami. The interesting thing here, if he goes to Miami, he'll have the Robinhood logo on him, so that would be good for Hood. But B is some people are saying this whole link is fake, and a ton of people are just manipulating the prediction market odds, and they made up this fake story about the Miami Heat intern messing up with unlisting a YouTube video. And the prediction markets went from 25 cents on Miami to 50 cents. So imagine someone had a plan to make this fake story about like the links getting uploaded. They bought all the contracts at 25 cents. They doubled their money because then ESPN started reporting that, hey, Miami Heat intern put out a YouTube link that wasn't meant to go public. Now, I don't think it's fake because the Miami Heat did comment and they said like, that's in case LeBron comes. So we set up a link just in case he shows up, yada, yada. But a lot of people are thinking like this just sounds super fishy. Maybe it was just an honest mistake, but the prediction markets are playing a big role here, which is pretty crazy. I still think he's going to Miami. I think it's happening the more I've thought about it, but I mean, it's so interesting to see the dynamics of the prediction markets now with these types of big events. Tesla right there, 378. As that one's flat on the day. He's going back to Cleveland. I thought originally he would go back to Cleveland. I don't think he's going to Cleveland, dude. I think he's going to Miami. I think he wants to win. If he wants to win, he might end up picking Miami. All right, NVIDIA unfortunately getting a red candle at 213.55. All right, put in the chat right now. Did NVIDIA top today at 213.55? Put in the chat, yes or no. Did NVIDIA top at 213.55? That price action right there with those 2 corresponding red candles looks very similar to what has been happening every day. It's just at a much higher price. Having said that, if the buyers step in, maybe it's just a little pit stop and we're going higher. No, no, no. We are all eternal optimists. That's important. It looks like a full inverted head and shoulders. Should it blow through? I mean, theoretically, yeah. That actually makes a lot of sense, especially because it's had now a month and a half of continuously putting in that same pattern daily. But I feel like you need a catalyst here. The problem is there's no news on NVIDIA, even though the chart, with those red candles looks like it should be just a simple pause before it goes back up. But there is no catalyst today. Like, they're really, outside of the AMD event, which, yeah, it's important. It's more important for AMD. Jensen did talk today. I mean, that is a catalyst, right? About Kimi K3. And what he said was pretty bullish for NVIDIA. CoreWeave now losing 84. The problem is the neoclouds sometimes go down when NVIDIA ends up taking a breather. Nebius also getting some red candles, but they've obviously outperformed NVIDIA nicely today. That's fair. Sometimes if it goes up without a catalyst, it's even more bullish. That's also true. The Google CapEx. Okay, who thinks Google's actually going to raise CapEx? So it's 190. Who thinks Google's going to give us a new range, like 200 to 220 or 190 to 200? Let's actually do a poll on that. Who thinks it's going to go down? Who thinks it's going to be flat? We'll end the show on this. And who thinks it's going to go higher? And then I will be back in a few hours, and we will have the biggest earnings we've had so far this year. As a lot of it's resting on Mr. Google right here. All right, Google CapEx up, down, flat. 190 billion, 180 to 190 billion is the range. Do you think that's going up? Do you think that's going down? Which means it would have to be lower than 180 billion. Up is higher than 190 billion. Flat is the exact same range they're going to keep. That NVIDIA 1000 Vera Rubin NVL 72 racks article is from yesterday. So I don't, unless that was the information article. That was like $630 billion of revenue a quarter, 2.4 trillion a year. Unless that news got dispersed more widely today, that's an old headline, which means I don't know if that's the reason for why it's moving here. You guys are saying up. Wow, you guys really think they're going to increase it? I mean, I definitely don't think they're going to decrease it. Then again, the increase does kind of make sense because they already issued 85 billion of equity, right? The nuance is in that 85 billion, a lot of it's going to stock-based comp and paying their taxes. Like a decent chunk of it's not even going to CapEx. But even if like 5 or 10 billion of that 80 billion goes to CapEx, yeah, they're going to have somewhat of an increase, even if it's not aggressive, which should be enough for the semis today. The question is just how the market interprets it if that ends up playing out. All right, folks, that is it for me today for the market open. Thank you all for being here. We'll be back on the market close. We'll be starting 3:45. I believe I will be with Tanner, Jose, and I think Neil. I have to confirm with Neil, but it should be a decent chunk of us as we analyze Google, Tesla, IBM, and ServiceNow. So it'll be a big, big day. Get some food, get some drinks, lock in. We'll be live for a good 3.5 hours. We're going to be listening to Google 4:30 to 5:30 and then Tesla 5:30 to 6:30. And then we'll probably be on for another 30 minutes analyzing the calls. So it will be a big one here today that we will discuss. All right, word of the day. I don't know what the hell ChatGPT is doing. I don't know what update they gave it, but it used to give us words about the market. And the past 3 days, they have not been about the market. Comrobi, the pattern of sunlight filtering through the leaves of trees. They sat beneath the oaks watching the Comrobi dance across the path as the afternoon breeze stirred the branches. A beautiful Japanese word for a moment most people have experienced but never had a name for. It reminds us that some of the most memorable things are the ones we usually overlook. Dude, I talked to ChatGPT about how to understand theta decay in options. I don't know what in my conversations has it led to thinking that it needs to be giving these types of words. Like for 4 weeks, we were getting market words. We were getting words that affected the market. I didn't change the prompt. I don't know what update they gave it. These are weird. I mean, it's a cool word. I guess eventually, you could use this somewhere, but still. Yeah, stop giving me actual English words. Okay. How do we say this? Let me pull this up. All right. Let's see. Here it is.
Filtering through trees. In Japanese, in Japan, it is pronounced as komorebi.
Komorebi. Okay. Not Comrobi. Komorebi.
Komorebi. Komorebi.
Okay. Komorebi. That is what we got for our word of the day. If you ever are sitting with a significant underneath the trees, observing the beauty of planet Earth, you can mention that you're sharing a very healthy komorebi with your partner. That is what we got. That is what we should spam Mr. Milkman with. I will leave his link right here. He is going to have no idea what the hell we're spamming him with. But komorebi, that's what you can spam Steve on Steve's stream. I'll be live again at 3:45. We'll be back for the market close. Tesla, Google, again, going to be really, really, really important today. Obviously, ServiceNow and IBM. So we'll be here at 3:45, and we'll be analyzing that throughout the market close. Komorebi, that is the word of the day.
All right, that is it for me. Thank you, everybody. Appreciate it. Love you all. We'll see you guys in a few hours on the market close. Bye, everybody. Have a good one.